Excited for the day. We're going to do what we do, guys. We're going to talk about those things that we always talk about. Um, Everything you need. That's my promise. Everything you need. You graduated 13th in class, which is a great opening statement with the chicks until the smart one said, out. How many? There were 19. That's awesome, Rob. That's awesome. Gary, I'm glad you're feeling better. Very glad you're feeling better. 19 people. My gosh, I had twice that in my English class. Cheeseburger Index Day. But it's low impact today. So guys, every morning, we're going to talk about news. Today is Wednesday, January 22nd. It's day 3 of the WEF annual meetings. And while that is medium impact all day long, it hasn't appeared to have a huge impact on the market. Not a whole lot of straight line moves, a lot of bouncing, a lot of volatility. That is wonderful for what we do. 10 a.m., CB leading index, the cheeseburger confidence. 23 and 4 inches of powder. We got about an inch of snow here just north of Austin. My kids got a couple extra. Houston got a pretty good powdering. I think Dallas did too. But we tend to miss all the nastiness. We tend to miss the huge storms, and we tend to miss the snowstorms. So it's good. I'm contemplating. My wife told me I should go play golf today. She's like, it's 50 and sunny, no wind, go play. So who knows? I may show up. blows away with a leaf blower. Nice. Rob, you graduated in 87, 19 in your class, 87 in your high school. My high school, I want to say my senior class was 2,300 people. Our high school was only 2 grades, just north of Dallas. I won't tell you where I fit into the mix there, but there were a lot of us. You didn't know 90% of the school, which was okay. That's it. So guys, I check news every day, forexfactory.com /calendar, and I'm just looking for anything medium or high impact. Just it puts me on my guard. Hey, things could change, things could go a little weird. They could spike, they could jump, and that's part of my routine every morning. Then I like to take you guys to the Nexgen page, and guys, this is where all the answers come from. This is where everything that I talk about comes from. This is where when I discuss rules, you'll find the rules. When I talk about management, you're going to see that management. When we talk about indicators, guys, all of it's here in the trading guide. Understanding trade management, trader funding. What is this one? There we go. Welcome to Nexgen. Indicators. I mean, there's everything that you need here. And this is a little wordy. I'm not going to lie. There's a lot. And if you just look at Nexgen's indicators, there is so much in here. Oh, wow. Never mind. Chris streamlined it. Good job, Chris. I'm going to take a very basic approach to teaching you to read your indicators. We're going to take a very basic approach, a very simple approach, a very focused approach to getting you where you need to be with this software. Where are my common terms? He has changed this around. Here we go. And we're going to start the way we do every day with a high probability trade. Remind me to go jump on Chris and tell him to stop changing the page and not telling me. Guys, we're going to talk about a high probability trade this morning, specifically a high probability trend trade. This is a trade where each indicator on every chart agrees with the rules for the trade, guys. This is when the triggers are their strongest. No termination conditions exist. There's no trouble spots between your entry and your target, guys. This is the best of the best. This is a trade that typically wins 70 to 80% of the time. This is a trade that's going to create confidence through that memory of success. But most importantly, this is a trade that will teach you to read your charts. It'll teach you to read your indicators. That'll have you looking at the market in front of you with the software and identifying advantages, learning to read your indicators and what they're telling you and what it means to you. in regards to taking a trade. You will find that chart reading is about 90% of your day, watching your indicators, waiting for advantages, and then the 10% is when they're present. That's when you're going to pull the trigger to get into the market. That's when you're going to have to make things happen. But there's a lot of waiting in the market, and we're not waiting so much because there's not opportunity, but because as investors, as businessmen and women, we should wait for the best opportunity. We should wait for the opportunities that have the highest chance of success. And everything we do is patterns. Everything we do is patterns. The market has a memory. And what we're doing is we're talking about a high probability trend trade that is nothing more than a pattern that typically wins 70 to 80% of the time. And once you get good at reading your indicators a little bit and you can understand what they're telling you and you start speaking to yourself in terms of advantages, what happens is you understand where the market is likely to continue. This becomes your entry. First, it will be your entry for the highest probability trend trade, but when you learn to read your indicators, that may be your entry for a high volume area trade or for a momentum style trade. You're going to understand where the market is likely to go. This is going to help you with targets, and you will understand where the market is likely to stop. You will see a metaphorical giant red flag waving in front of you saying, hey, don't take that next trade. You've reached an area where things could change. Sit on your hands and wait and see what happens, guys. So we're going to focus on these three rules. We're going to break them down individually. The first hour really has nothing to do with trading. It has everything to do with chart reading. So the first hour, we're not looking for a trade. We're going to break it down individually, and we're going to look for strong trigger lines first, because those give me the advantage of momentum. That's the first advantage that I'm looking for as a trader. Then we're going to talk about termination conditions, how to identify them, when to avoid them, how to avoid them. Because when there's none present, it's going to give me the advantage of a clear path. And then we're going to talk about the entry for the highest probability trend trade. And that's going to define our entry area, the point where the market is most likely to continue. Learn these individually. Learn how to identify momentum before you ever worry about termination conditions. And I'm going to tell you right now, identifying momentum is the shortest, easiest lesson that you're ever going to get. It's one look that never wavers, never changes. And then learn your termination conditions. And you're going to couple these two together. And guys, this is your core. Once you can identify strong triggers, easy lesson, and you can identify a termination condition, none present, giving you a clear path, you have everything that you need to be consistent, to be profitable. You have everything you need to be successful with the software, guys. This is going to be your foundation. This is your 100 feet of concrete that you're going to build your trading skyscraper off of. Once you understand these, it's just a matter of finding entries. Your first entry is going to pinpoint right where the market is most likely to continue with the trend. It's going to reduce risk. It's going to maximize profit potential. But I want you to remember that momentum and clear path, these are the two that are going to pay dividends for a lifetime. These three advantages, these three rules happen on only two charts. There's a large chart. The large chart will define direction, momentum, areas. It's a very broad stroke of a brush, guys. It shows the overall opinion of the market. It takes one bar. It takes the most current bar on the large chart to define these things, direction, momentum, and areas. Your first two rules, providing your first two advantages, that core that you're focused on in the beginning, these happen on the large chart. So you're going to focus on this big, slow-moving chart, and you'll have the advantage of momentum and a clear path before you ever turn your eyes to the smaller, faster chart. And the smaller, faster chart is nothing more than a refinement chart. Inside of one bar on the large chart is approximately 20 to 30 bars on a small chart. I'm going to show you this refinement. I think it's important to see it. This refinement process, breaking that one bar down into those multiple bars, this is how we pinpoint with accuracy where the market is most likely to continue and that high probability trend trade. It's all of these bars up and all of these bars down that reside inside of that one bar that gives you direction, momentum, and areas. And that refinement process, I can't talk, excuse me. It reduces risk. and it maximizes your profit potential. And it's pretty outstanding, the precision that rule number 3 provides for this trend trade. We use these two charts because it's important to remember who you're trading with or who you're trading against. Your large charts are like the large crowd, the men and women with the means to create trends, to establish momentum. These are the same people that react at key areas, which is why we can identify them as areas that we don't want to trade into. And they really set the tone, and this is who you should be following if you want to give yourself the highest chance of success. But there's also a small crowd, and the small crowd is your small chart, and these guys fight everything the large crowd wants typically, and they try to push down when the market's going up, or they try to push up when the market's going down, and they create what we call retracements. And a retracement or a pullback is nothing more than a little movement in the market that's counter to everything that's going on in the big picture. These guys fail 70 to 80% of the time. Your entry has you pinpointing where they're most likely to fail, which means that if they're losing 70 to 80% of the time and you're getting in at the point where they're most likely to lose, it gives you the opportunity, the potential to win up to 70 to 80% of the time. And that's exactly what rule number 3 does, is it reduces that risk and it kind of ups the odds for you. So we're going to go through this today, the same plan that I give out every day to get into where you want to be. Post in my room, guys. There's a lot of people that sit in this room and don't want to post, and everybody's got their own reasons for doing that. Sometimes it's pride. I know it was for me. I didn't want to post the wrong trade in the room. Terrified me to make myself vulnerable, to put myself out there, to have 30 strangers that will never see me in the real world judge me on my trades. Guys, you're not going to get judged in here. If anything, you're going to get a great lesson. The people that post in the room the most, these are the people that get to where they want to be the fastest, because we begin to identify where you need help, and I give you a plan to get helped. The second thing is using the spreadsheet that I'm going to give you guys. I give it out every day. I added a little something this morning. I'll show it to you in a minute. But those are the two right there, guys. You've got to take pictures and post them in the room, and then you've got to go back and study those pictures and the feedback that you received so that you can get to where you want to be, so you can be a chart reader. So we're going to learn the trigger line and the Fibonacci rules for when it's okay to trade. For me, and I would hope this would carry over to you, it's okay to trade when my rules are met, because my rules are based on a pattern that has been proven by me, tested, back tested, run through the ringer, and it's been proven to win more than it loses. It's not okay for me to trade when my rules aren't met, because I lose that statistical advantage. And guys, let's be honest, this is a job, and this is an investment, and winning more than losing is the goal. You will lose, that's a part of trading, but winning more than losing, winning bigger than you lose, that's how you get to where you want to be. So you guys have the ability to simulate. There's no obligation anymore to have $20,000 and hope you get it right before the $20,000 is gone. You can simulate. It's like playing Monopoly to become a real estate tycoon. There is no risk. So simulate and practice and post your pictures in the class until you're sure you have the correct rules. And more importantly, until you're sure that you're reading your indicators correctly. I'll tell you, if you are not. You can't practice the wrong trades, guys. Day trading is one of those endeavors where luck tends to run out, and it usually runs out when you go live. You're like, oh, I know I broke every rule, but I made $1,000. This feels awesome. Let me risk my money. Let me put my real money into the market and break all those rules again, and that's just where luck tends to run out. It's a short-term victory that typically produces a long-term failure. We will simplify today, every day of my life. My focus is simplicity. We're going to talk about one trade initially. This says 2 trades. I will give you a plan with 2 trades. We're going to talk about that highest probability trend trade. Your ability to read charts based on that trade will carry you to what we call a medium probability trade. Because once you understand how to identify advantages on a chart, you know what you're up against when you get into a trade. You know whether it's perfect or whether there's something that you need to keep your eye on because your chart read tells you maybe you don't have the best momentum, or maybe that path isn't as clear as you wish it was. I may have to manage assertively. So you will get 2 trades on the plan that I gave you today, but you've got to learn the looks so that they become easy. You've got to know what it is that you're going to commit to, guys. You got to know the pattern. And that's exactly what we're going to talk about. We're going to talk about the patterns. And we spent an entire hour not worried about the money, but focused on the process. Not worried about winning or losing, but focusing on being able to execute the process flawlessly. So post in the room. Every time you post in the room, it's a private session. Every time you drop a picture in the room, we're going to talk about, I'll show you. We're going to talk about what you saw. Excuse me 1 second, guys. Have an amazing day.
Me too.
Rule number 1 is always kiss your wife goodbye if you get the chance. Every time you post in the room, tell me what you saw. Talk about advantages. Let me know what your chart read was. Let me know what you saw. Good morning, Miss Jen. Now I feel awkward. I said good morning, Miss Jen, and I just kissed Miss Jen. Whoa. Tell me about the momentum that you see. Tell me about whether or not you had a clear path. Tell me where you got in and why. Tell me why you exited, guys, because every time you do this, we're going to talk about your read. We're going to talk about your entry. We're going to talk about your exit. And if there's a way to do it better, my promise is that I'm going to help you do it better. That's the posting in the room part. Wrong, Miss Jen. Yep. No, I kissed the right one. There's no doubt about it. The second one is your spreadsheet. Guys, this is the second part. This is your trade journal initially. The first tab on the spreadsheet is trade tracking. Every time you take a trade, you should take a picture. That picture that I just showed you how to annotate for the best feedback, I dropped it into the spreadsheet for you guys this morning. I wanted to make sure that you had a copy of that. You should talk about those first 2 advantages, momentum and clear path, momentum and clear path. I really want you to be focused on insisting on those 2. And then there's a giant section that says feedback from class. What did Mark say about my chart read? Did I miss a read? Did I read it perfectly? What did he say about the trade? Was I breaking rules? Was I following rules? Was there a way to get in with less risk? Was there a way to get out with higher profits? You're going to get all of this, and I love this right here. In a different life, I was a personal trainer, and I had a wife call me once. I trained her husband, really nice guy, and she called me one day. She got my number from his phone, and she goes, Mark said, Mark said, Mark said. She goes, if I hear Mark said one more time, I'm going to find you. And I was like, and she was kidding. She loved her new husband's physique, but Mark said should be it. What did Mark say about it? Because Mark's been doing this for 5 years now, and I'm pretty good at chart reading, and I promise you I can make you better at chart reading if you just give me the opportunity by posting in my room. How to paste into the spreadsheet, guys, I put the pictures there for you. But what happens is you come back and study this spreadsheet every morning. Every trade that you took yesterday, you need to go back and look at. What did you do great? What did you mess up? What rule did you break? You'll begin to see patterns that are bringing you success, and you'll also begin to see patterns that are taking that success from you, and then we'll work together to fix those. The second page is the rules for the high probability trend trade in green, what it looks like to have them met. These pictures are annotated pictures of charts, strong triggers, terminations, clear paths, entries. They're all annotated so you know exactly what you're looking at and why it relates to that particular rule. This will be a great study tool for you. There's the client trades. This shows the entry sequence, long and short, for the high probability trend trade. This shows a very mechanical management plan that's going to be in that plan that I put in your hands. There's almost 400 pictures of client trades that you can go back and study. And you are always invited. If you click on one of these client trades and you look at it and you're like, man, I don't understand what's happening in this one, take a picture of it. Drop it in the room. And say, hey, Mark, why did she get in there? And why did Miss Mary exit right here? And what's going on here? And I know that she said strong triggers, nothing in the way, but I thought that was this, or I think this is that, or that could have been that. Guys, drop it in the room. There's like 380 pictures for you to go back to study to analyze. A lot of you are adrenaline junkies. You want to trade the NASDAQ. The NASDAQ moves about 10 times faster than the other markets. It's really not a beginner's market, in my opinion. Learn the patterns first and then learn how to translate them. And then finally, speaking of patterns that repeat themselves, guys, patterns that happen every day in the market. That's one of the things that trading is. It's just taking those patterns, identifying them, and learning how to capitalize on them. And I want to show you a picture. I think we took it yesterday. This is it right here. We took this picture yesterday. This is such a good illustration of patterns, because the market on the left was NASDAQ from the 21st of January 2025, and the market hit resistance and pulled back to support, retested resistance, created a pivot stop out, and that's what reversed the market. And then in crude oil in 2021, straight from the user guide, price reached resistance, came back to support, retested resistance, created a pivot stop out, and that's what reversed the market. Guys, the market is cyclical. The market has a memory, and we've cracked the code to the memory. So all we're doing is learning patterns. Patterns are going to begin to jump off the screen at you once you're reading your indicators. And that's kind of what takes us to the final page. The final page here is where you can build your trading plans. So as you begin to recognize your patterns, this is what the high probability trend trade looks like. Flood this thing with 50 pictures of them. Steal them from class. Go to the user guide. Take them. Simulate them. But drill them into your memory so that they become easy. You will have to learn how to manage every trade, and you're going to begin to see things. Every time you see something, you're like, man, I've seen this before. Drop it in the room. Hey, Mark, does this pattern mean anything? Am I seeing something that's repeating, or am I making stuff up? Guys, take a million pictures. The people that take the most pictures, these are the people that get to where they want to be. I'm just under 8,300 pictures right now. That's in the last year. That's since January last year. I'm at almost 500 pictures this year because I'm learning something new. I take approximately 30 to 40 pictures a day on a weekday, to be honest with you, on a not strong picture taking day. So while we talk about pictures, I want to share something. I wrote this yesterday. I'll drop this in the room for you. I'm going to drag my feet, guys, because the last hour's been slow lately. So the pictures you can take all the pictures you want, but these are the pictures that I think are the most effective in learning. The first one is take a pre-trade picture. So when you activate your limit order to get into the market, take a picture. And you don't have to annotate it in the moment. Don't miss out on the trade. Don't distract yourself. But you'll go back and look at that picture and make sure that you didn't miss anything in your analysis. And if you did, you'll start to see that pattern of what rules seem to be escaping you. I set that limit order. I took the trade. It didn't win. Oh, man. I just noticed there was a termination condition there. Okay, I need to focus on avoiding those. Take pictures during the trade. Did anything change? And all you have to do is snap a picture, let it fall to the wayside, and keep managing your trade. I do this. I take pictures of my stop movements. I take pictures of what's going on. I don't necessarily always annotate it, but I can go back and make sure that I'm managing the trade appropriately. And then after the trade, this is where I'll go back and I'll write my rules on the chart. When the trade is gone to completion, I'll take that picture, I'll annotate momentum, path, entry, exits, why I moved my stop, where I got stopped out, and this is the one that I'm going to go back and study. This is the one that goes into the spreadsheet. And then finally, the no trade picture. My rules weren't met. I chose not to take the trade. And guys, this is reinforcing that the rules are your lifeline, that they have been proven to win more than they lose, and your best shot at trading longevity comes from following that plan. But if you take those no trade pictures and you drop them in the room, sometimes there was a trade. Sometimes your rules were met. Maybe you had a misunderstanding on where terminations come from. Maybe you had a misunderstanding on the entry, guys. If you show me the trades that you don't take and tell me why you didn't take them, maybe there's more opportunities out there for you. I can tell you that the no trade picture is what changed my trading, because I used to let the small chart talk me out of trades until I started posting these in the room and I started getting the feedback on why it was okay to take those trades, and it doubled or tripled my trade count. So pictures 3 and 4 are the best ones for feedback, guys. I dropped this into the room. You can have it. And that's kind of my promise to you, is you will get everything that you need to be successful before this day is over. I will give you the rules, what they look like individually, how to study them. I'll give you places to put them as you study them. I'll give you checklists to follow, plans to follow. I'll give you ideas on what it takes to make every day to reach your goals, how you should be entering and exiting if you're following a specific plan. Everything that you need to be successful. The only thing that Nexgen doesn't provide, the only thing that I haven't figured out how to bottle is the repetition that it takes to make it easy. And I haven't figured out how to get you guys to do the work. But I've washed my hands of that worry. It used to drive me crazy. But I'm going to give you everything you need. Whether or not you use it will be entirely up to you. So I'm rooting for you to use it. I'm rooting for you to keep me busy. But if you choose not to, I'm going to tell you right now, you'll get out of the software what you put into it. The work that you put into learning the software will come back to you tenfold. And the work that you avoid will haunt you as a trader. Trust me, I've been watching it for years. So let's get going, guys. What am I looking at? Every time I open my charts, what am I looking at? Triggers and areas. Everything we do revolves around triggers and areas, whether it is momentum, whether it's termination conditions, whether it's entries. Triggers and areas. So every chart you look at is going to have small triggers and large triggers, and you will get this PowerPoint as well. Small triggers are a fast-moving average. That's not even important, but some of you engineers like to know. They're the same no matter what time frame. It takes 2 lines to make a small trigger. Hey, good morning, K-Dog. And the large triggers are a slow-moving average, and it takes both of those lines to create a large trigger. So when I say triggers through the area, it's both lines. When I say triggers reach an area, it's these trigger lines making it to an area. So any time frame, large, small, range, month, tick, doesn't matter. Smalls and large are what you're looking at. Initially, we're going to use the small and large triggers together to define momentum. And then you'll use them to define termination conditions. And you'll do that at areas. And these are the areas that you're going to see on every chart, guys. And this is just a roadmap. These are just the names. Has nothing to do with anything other than recognition. There are divergence highs. There are divergence lows. There's resistance, support, mid-bands, yellow 1-to-1s. These are what you're going to see on every chart. So what we're going to do is we're going to learn to read them. We're going to let them talk to us. And we're going to let the large chart lead the way, guys. We're going to trade with the large crowd. We're going to give ourselves the highest chance of success. And the large chart, which defines direction, it defines momentum, and it defines areas, must give us the advantage of momentum first. And that advantage of momentum is coming right from those strong trigger lines. So we're going to let the background be the first thing that we look at. Is it green or is it red? Is it up or it's down? Green is up, red is down. My path of least resistance says, hey, trade in the direction of the trend. The trend is your friend. It's the oldest cliche in trading that you've ever heard. In order to have strong triggers and an uptrend, my small triggers must be up and above the large triggers. The large triggers must be widening. Flat triggers have no momentum. They must be widening, opening up. And it's the space that's created between the small and large. I want you to think about scissors that have just opened, and when those small triggers break above the large triggers, when that space is created, those scissors open, the odds are favorable for the market to continue up. In a downtrend, it's the same look, just inverted. Your small triggers are below your large triggers. The large triggers are wide, they're angled down like a dive bomber. And it's the space created between the two. It's those opening scissors that let me know that the odds are favorable for the market to continue down. So anytime I have strong triggers, you're going to associate it with odds favorable momentum. And you're going to see it annotated on a lot of charts. OFM, odds favorable. Guys, it's rule number 1 for a reason, because odds favorable momentum pushes a market in the direction of the trend. Odds favorable momentum is typically what it takes to break those key areas. And odds favorable momentum will even cover a lot of the mistakes that new users make. Momentum up is when you're using that refinement chart on the 1 bar to buy Fibonacci support. Looks like a tail on the large chart. That 1 bar endeavor, it's like it sprouts a tail and then heads the other direction. Rule number 3 is going to have you pinpointing where that tail is most likely to form. Rule number 3 will have you pinpointing where that tail is most likely to form, and this will become your entry for the highest probability trend trade. But momentum doesn't last forever. Eventually the market runs out of gas. So when the small triggers work their way back inside of the large triggers, this is a weakening. The scissors close. Those small triggers inside of the large triggers has nothing, it just says ASMB. It says that there is a lot of momentum to the upside and there is a lot of momentum to the downside. And we're going to take that advantage, and on its own it's just one thing. But when you take a lot of momentum and there's nothing in the way, well then, yeah, the odds are favorable that that market will continue up, and the odds are favorable that it will continue down. But remember that when we talk about rules, a trade is 3 rules coming together to form the trade, 3 advantages. So right now we're only focused on that first advantage. Right now we want to be able to recognize strength, because strength pushes a market, and that's exactly what we need. Does that make sense? The odds are favorable. I love it. I love the language. And then when we have weak triggers, when the smalls come back to the large, this weakness lets me know that anything can happen up or down. And you'll hear that in the class all the time. And you'll see people annotate it on charts. ACH. So ASMB, the one thing that we do is we're learning to look at our charts and speak advantages out loud, scaring our pets. I see the market, the odds are favorable for it to move up. I have strength, odds favorable, or I'm looking at it and there's weakness and anything could happen up or down. And this is where big retracements happen, and this is where Fibonacci areas tend to hold. And if you look at it, this is such a great example. Strength pushes the market down, and those small triggers work back inside right at key Fibonacci areas, and that's where your reversal happened. So ASMB, what we're doing is we're going to couple that strength with the clear path. Strength comes up, breaks some areas, weakness right into an area. Look at how the market bounces. You don't ever have to be caught up in that. Look at the big picture, and this is a large chart. See how the separation, the market continues down? When they return, that's where that bigger retracement comes from. And this happens all day. There's those weak triggers. There's a retracement, there's those strong triggers, and it pushes up. And now, right now, we're kind of in a little thing. So yeah, on the most current bar, and this is it. This is the most current bar on the crude oil market. Remember when I said flat triggers don't have any giddy up? We want those to open. The separation is there, but they're still flat. We want these wide and angled down, letting us know that the odds are favorable for the market to continue down. And if we go to the S&P, notice that the background is red, which means that the market is trending down, but my large triggers are up and my small triggers are down. And they're on the wrong side, so I'm not going long, but I can't go short. Rule number 1's not met because the large triggers are up. Here's your little cheat code. If the triggers aren't the same color, you don't have strong triggers. How easy is that? So anytime you see that indecision, anytime you see what looks like the colors not matching, you just don't have momentum, guys. Rule number 1's not met. It's okay to sit on your hands and do nothing. I'm going to go back to that crude oil, because when we talk about termination conditions, that market is putting on an absolute clinic in termination conditions. So is everybody good on momentum? I do believe it's the easiest lesson that I teach each and every day. Separation is strength. No separation is weakness. It's pretty easy to pick the side you want to be on. I always want strong versus weak. I always want odds favorable versus anything can happen. Once I have momentum, once my triggers are strong, I have to go to the next rule. It's like a flow chart. If I have strong triggers, then I will look to make sure that there's no termination conditions, because I want room to my profit targets, because I want a clear path. It increases the likelihood of success. So a termination condition, all it is it's an area on your large chart. Those same areas that we talked about: blue support, red resistance, yellow 1-to-1, cyan divergence lows, magenta divergence highs. Every one of these lines on the large chart, the big chart, this is where the large crowd's most likely to react. This is where decisions are made. This is where buyers buy and sellers sell. This is where fights and reversals happen, guys. You're going to see them long before you ever get to them. So in order to determine or to identify a termination condition, there's two things that have to happen. The first thing is you're going to allow price to reach the area. You're going to let the buyers push up to resistance. You're going to let the sellers push down to support. I don't think you need it, Chopper. I don't think you need it as a brand new user. I will stick to my guns 100% that two charts give you everything that you need. And as a brand new user, the more charts you look at, the more things you have to think about, the more decisions that need to be made, the more conflict you're going to see, and you'll find yourself avoiding your rules and focusing on whichever chart gives you the entry. Does that make sense? Are there people that use them? Absolutely. Do you need them? I don't think you do. And let me show you something cool, Chopper. A lot of people don't know this. When you look at your large chart to define areas, your large chart actually, guys, can you hear me? Give me a Y if you can hear me, please. Your large chart contains fibs from not only the 13.2 chart, there we go. Let me give him his little message there. Hey, good morning, 10K. And guys, that's one of the things. If you ever can't hear me, please let me know in the room. I'll ask the entire room, and sometimes you need to reboot. So Chopper, one cool thing about the large chart is there are lines from a 21.3, so you've actually got the fibs from that higher time frame without all the noise of having to look at the chart. You've also got the fibs from the 5.1 and the 13.2, and every one of them is equally as important, especially when defining terminations, because all we do is we let price reach the area. We don't weigh them out, sort them, give them any advantages one over the other. If I reach resistance, if I reach a divergence high, if I reach yellow 1-to-1s, all I have to do is ask where my triggers are. Price reaches the area. That's what sets off the decision-making process. Once price hits that fib, we're done with price. We're going to trigger lines. Where are my triggers? If they remain below resistance, it's a termination condition. This termination condition could create a big, ugly, untradeable bounce. This termination condition could create a fight that dances right at the area. This termination condition could also reverse the market. And if you see a termination condition that reverses the market, large triggers go from green to red, we call that a strong top. A strong top it's not mandatory for a high probability trend trade, but it does set you up for the best of the best. And a strong top, you'll find, is rule number one for at least 3 other trades. And it just means that the buyers were in control, and when they reach that key area, the decision made by the buyers to exit or the sellers to take over was so impactful that the entire market changed direction. So strong tops, strong bottoms are the same thing. If price reaches Fibonacci support, where are my triggers? If they remain above, this is an area that could stop, that could bounce, that could reverse. And if it reverses, it's a strong bottom. And that's the precursor to the highest probability trend trades you can take, even though it's not mandatory. But the thing that I want you guys to get out of this is that when rule number 2 is not met, absolutely no trades into the area. I'm like 0 for 8,000 on predicting whether or not an area will break, guys. And they do break. They break all the time, very often with momentum. But more often than not, they don't. And that's why rule number 2 is a rule. And I want you to see, let's just make this kind of big. And this is from yesterday morning. The market went from a divergence low to resistance to support to a fib to a fib to a fib to a mid-band to a fib to a fib to a fib. Guys, we're not the only people that know where these areas are. we're not the only people that know where that Fibonacci resistance is. And we're not the only people that know that Fibonacci support is right there, and it could very well stop that market, and that resistance can create a big untradeable bounce, and that support can do the same thing. And guys, we're at support right now and those triggers haven't broken yet, and you can see the indecision on that large chart. You can see the fight between the buyers and sellers, and look at this. If I put one box around one bar on that large chart that's dissecting the fib, and we look at what's going on inside of that one bar, that's that refinement process. Look at the fight between buyers and sellers right at a key area. So I show that because I want you guys to realize that you don't have to be caught up in these fights. You don't have to be a part of their decision-making process. Simply wait for it to either reverse and look for your opportunities the other direction, trading from a fib, or let it break. And guys, they break all the time. This is what it looks like and what it means to you as Fibonacci resistance breaks. Initially, price reaches the area. Once price reaches the area, I am done with price. I wash my hands of price. The decision-making process has been started. If my triggers are below, and guys, every time you reach a line, it will be a termination. It might only be a termination for a half a second, but it is a termination. And my rules say absolutely no trades into that area. Wait, let's see what the reaction is. Let's see if it bounces, if it breaks, if it fights. I don't know, but I can sit on my hands. I can do absolutely nothing while I wait to see. The number 2 here, notice that there's a pause button. When the small triggers, both lines, get above resistance, smash through resistance, but the large triggers are lagging behind, they haven't made it through, this look with momentum shows me that this area has the potential to break. Trades can be taken. It's what we call a 50-50 trade. 50% of my triggers are through, 50% are not. But they have to be managed a little more assertively because my path isn't clear yet with this look. It's only the potential to break. But once the small triggers and the large triggers get above resistance, resistance behaves as support. My area is now broken, and my path is clear and will remain clear until I reach the next area. So it breaks fib lines, large triggers break paths, then wait for the bounce dip down to enter. Yeah. So right here, chopper, do you see how I have momentum? And do you see how my triggers are above resistance and there's nothing hit here? This is rules 1 and 2 met. This is where I'm going to go to that smaller, faster chart and look for an entry. Absolutely. Perfect. Letting the large chart lead the way. Price reaches, triggers above, do nothing. Sit on your hands, guys. It costs absolutely nothing to not be in the market. Small smash through, larger above. This area has the potential to break because of momentum, but it's not broken yet. Smalls through, large through, the path is clear. I'm going to look for an entry all the way until I hit the next area, and then I have to start the process over. Does that make sense, everybody? K-Dog, since you've gone back to basics, you've won 8 out of the last 10 the last 2 days. Absolutely love that. That is such a common story. So what we're going to do, Chopper, is when I have momentum and when I have a clear path or even the potential to break, do you see that little tail that forms on the large chart? That's a potential entry opportunity. Down here with momentum, it hasn't quite reached the fib. That's going to be your potential entry opportunity. Potential to break all that momentum. This is a potential entry. I still have to go to the small chart and see if the rules were met. But what you'll find is that the easiest money is when you trade from a fib to a fib instead of trading directly into a fib. Sometimes it doesn't, Rob. Sometimes you don't get an entry. That's just a part of life. And sometimes the areas are stacked and sometimes you can't get a clear path. And guys, remember, we're talking about one trade right now. We're talking about one trade. So Chopper, right now on the ES, let's go to the live market and let's answer your question. This is crude oil. So right now on the ES, you don't have your rules met. The larger green, the smaller red. So rule number one's not met. Does that make sense? I don't have odds favorable momentum. I don't have the momentum that I need to look for an entry. Are you with me on that? Larger up, smaller down. Rule number one's not met. Chopper, if I don't have momentum, why the hell am I looking for a trade? Anything could happen. I don't have that advantage. It's almost too easy, isn't it? Chopper, the hardest thing you will ever do is absolutely nothing. The most difficult task as a day trader is doing nothing. So work with me on this one. We haven't discussed entries at all, Chopper. We haven't talked about it. The only thing that we've talked about so far is making sure that you have momentum and a clear path. And I promise you, we will talk entry. But if you don't understand these two, let me show you something. One of my favorite pictures. If you don't understand momentum and path, you are likely to trade into areas that could stop the market. You're likely to take trades without the momentum needed to push that market in the direction of your trade. This is an 11-hour stretch. 36 termination conditions would have produced a loser. Only six broke. So you've got to be able to understand momentum is great, but without a clear path, it's just not going to work. And then if we go back, or it's less likely to work. And if you look at it, the trend is down, but price reached Fibonacci support and all the triggers are above. I can't go down, right? So Chopper, this is my if then. If the market decides to continue up and give me odds favorable momentum before it hits those yellow 1-to-1s, I'll look for an opportunity for a long trade in here somewhere. If everything gets below Fibonacci support, I get odds favorable momentum, I'll look for a high probability trade in here. Until one of those happen, I'm in a 100% no-fly zone if I'm a high probability trend trader because I don't have rule number one met. Does that make sense? And there will be times when there's not a damn thing to do, guys. There'll be times where there's support after support after support, or resistance after resistance after resistance. There will be times when you get caught in between two areas and it doesn't seem like it's ever going to break out. This is 90% of your day. 90% of your day is doing nothing. And the more time you spend with the software, the more you'll realize that that is a gospel truth. 10% of your day is actually taking the trade because the advantages are there. But it's okay to do nothing. It's all right to sit on your hands. It's preferred that you wait for the best of the best. Because the futures markets trade billions of dollars every day. Billions with a buh. You need $400 a day, ladies and gentlemen, to capture 6 figures in your trading income. 6 figures is produced from only $400 of wins a day, 252 days a year. That's pretty outstanding. So waiting for the best of the best, what you find is it's worth the wait. And I think K-Dog just gave us a great example of that. Since he's gone back to basics, since he started focusing on momentum, path, and entry, you're 80% winners, K-Dog? That's a pretty good percentage to build a trading plan around. So let's focus on rule adherence in the beginning. And when you learn your rules like a scholar, you'll learn how to break them like an artist. Your plan will grow. Remember that right now we're talking about the best of the best, the highest probability, the trade that teaches you to read your indicators, the trade that keeps you around. And it starts with momentum, strong triggers, and then you couple that with a clear path. It's just a flow chart. And then when I have these two, that's when I'll go to that small chart. That's when I'll look for my entry, guys. But, big but, I'm going to show you my but. There is one time when I go to look for that entry that I'll choose not to take that entry. There is one time where my small chart can let me know that I don't have a clear path. And one of the termination conditions in the user guide is 3 divergences in the same price range. 3 divergences in the same price range may terminate the trend. Well, Mark, how do I define the same price range? Seems pretty gray to me. Use the exact same rules for broken areas. This divergence is in play until both the small and the large chart, or the small and large triggers, get below it. So 3 divergences in the same price range may terminate the trend. This is the only time I will not take that last short trade, because my small chart has shown me that the market is slowing down. The small chart has shown me the change that I can't see in that one bar. 3 divergences from a high or low may terminate the trend. Rule number 2 is not met. And this happens on every chart, but you'll see it on the small chart first. If my small triggers are inside of the large triggers, if I have those weak anything can happen triggers on my small chart, it becomes more powerful. If it gives me the 3rd divergence higher than the low, this is a head and shoulders pattern, it's actually more powerful still. So 3 on its own will do the trick. 3 with weak triggers is stronger. 3 with weak triggers and a higher last pivot or a lower pivot from a high. That's it right there, guys. And that is the only time when I have momentum and a clear path that I will choose to not look for an entry. 10K, so not losing money is also making money. It doubles your money because you don't have to recover the losses. Amen. Amen. Has anyone ever had a day where you took 3 perfect trades, made a buttload of money, feeling great, but you gave it all away by breaking your rules? That $900 that you made is suddenly negative $300 because you kept breaking rules, because you start feeling invincible, you start forgetting about your rules? Guys, I did it the other day. I was up $800 and I got cute with it and I hit my stop loss. Been there, done that. I'm human just like the rest of you. This sermon is for me as much as it is for you guys. But here's the cool thing. Once you have momentum, once that path is clear, I'm going to look for an entry on a smaller, faster chart, on a refinement chart. The large chart has led the way. The large chart has told me, you're okay, 10K, scream it from the mountaintops. Large chart has told me that I have a market that is pushing in the direction of the trend. Here's exactly what it looks like. Hold on. Boom. I have a market that is pushing in the direction of the trend. I have a market with those strong triggers with nothing in the way. And then you see these, right, Chopper? These tails. And I tell you, these tails are potential entries. We don't trade the tails. Once the momentum is there, once the path is clear, this is the tail. This is what it looks like on a smaller, faster chart. That's where the magic of rule number 3 comes in. We're going to use a limit order. We're literally going to wait for the market to come to us. And we're going to do it by buying or selling that pullback, that little fight from the small crowd. And we're going to have that limit order waiting right at an area, at a fib, at a mid band, at a yellow 1-to-1. And this is the part that I really want you guys to pay attention to. That area needs to be inside of triggers. Inside of triggers. Because triggers define where that retracement is most likely to occur. Triggers define where that pullback is most likely to go. Triggers define where the small crowd is most likely to push down against everything that's going up. And on your entry chart, you have large triggers. These are the smooth triggers. These are the same triggers that you'll use to define momentum. Separation between the small and large. Guys, this is odds favorable momentum on a small chart. But price also returns to the triggers on the large chart, the 13-2 triggers. So from the highest point of the triggers to the lowest point of the triggers, this defines the most likely zone for the retracement. This is where those price bars are most likely to push down to. But we can narrow that gap by insisting on favorable large triggers as a brand new user. Favorable large triggers are wide. They're in the direction of the trend, and both the large triggers and the synthetic triggers, the 5-1 and the 13-2 large triggers, are one on top of the other. So look at how small the box is where that retracement is most likely to return compared to how big that box is when they're split, when they're away from each other. Guys, favorable large triggers increases accuracy. And we're not looking for trades from triggers. Once you put lines inside of triggers, fibs, midbands, yellow 1-to-1s, you've got the smallest little area where the small crowd is most likely to fail. You've got the tiniest little spot where the market is likely to bounce in the direction of the trend. And this is defining right where that tail is most likely to form on the large chart. So let's go through a long trade. We'll go through a long and a short. I'm going to pull up my spreadsheet because entry sequences are on the spreadsheet as well. But let's do the long first from the PowerPoint. Once the rules are met on the large chart, there's a reason that I wrote that on there. The small chart, it's the siren song, guys. You will crash your ship into the rocks. Once the rules are met on the large chart, I'm going to turn my attention to the small chart to find my entry. And the first thing that I need is a reversal bar. I need the beginning of that pullback, that retracement, that fight from the small crowd. So this is what my chart's going to look like until that happens. I'm going to have momentum to the upside most likely, and it's going to be screaming without me. And I'm going to have this fear of missing out, gnawing in the back of my head, saying, man, just jump in. That's a lot of momentum. Just jump in. The path is clear. Guys, if you do that, it's difficult to manage. And you may do it later in life, but if you're looking for trend trades, your highest chance of success comes from waiting for the reversal bar, the beginning of that pullback, the fight from the small crowd. And then once I get the reversal bar, once you get the reversal bar, you're going to identify where the retracement is most likely to happen, where it's most likely to go, where these down bars are most likely to keep going down. Price tends to return to the large triggers. So I have large triggers and synthetic triggers. From the highest line of the triggers, doesn't matter if it's large or synthetic, to the lowest line of the triggers, doesn't matter if it's large or synthetic. This white box, this big zone from 72.99 all the way up to 73.15. This is where the retracement is most likely to occur. This is where it's most likely to happen, guys. And the tighter these are one on top of each other, the smaller this area becomes. That will help with accuracy. But I want you to see how this big zone where the potential retracement is, look how it decreases when we define our entry. Once I identify my trigger lines, I know this is where the market may return. But I need an area inside of triggers. Areas can be fibs, mid-bands, or yellow 1-to-1s. Since this is a long trade, the fibs are going to be blue. The mid-band's going to be green. The yellow 1-to-1s will always be yellow. It's right there in the name. Gee whiz. But they have to be inside of triggers. Notice that I mentioned that twice. This is a big deal. This box, from the highest point of support inside of triggers to the lowest point of support inside of triggers, this is where the market's most likely to bounce. This is where the small crowd is most likely to fail. This is the point where the trend is most likely to continue. Is everybody with me? We went from a big old ugly range, 16, 17 ticks, to about a 3-tick window where the market is most likely to continue. Guys, I am so confident in the likelihood of success from that point that I will activate a limit order 2 ticks above that highest point of support inside of triggers. And now you've done all you can do. You can't force the market to come back and give you an entry. You can't demand that the market gives you a winner. The only thing you will ever be in control of is whether or not you had those advantages, whether or not you followed your rules. And if price comes back and reaches your entry, you are in a long position. You're now active in the market, and you have the advantage of a market where the odds are favorable for it to continue up because of those strong triggers. And you have the advantage of a clear path, giving you room to your targets because no termination conditions were present. And you have the advantage of having entered where the market is most likely to continue with the uptrend. And guys, this is it. This is your high probability trend trade. This is the best of the best. This is the one that taught you to recognize advantages and taught you to pinpoint precisely where the market is most likely to continue with those advantages in place. So let's go through it again. Reversal bar signals the pullback. Define the retracement where it's most likely to occur. Refine that box to where it's most likely to bounce. This is your window of opportunity. From the highest point of support to the lowest point of support, your order goes 2 ticks above that point where the market is most likely to continue. Reversal bar begins the pullback. Define where the pullback is most likely to occur via the triggers. Define where the market is most likely to bounce inside of those triggers. activate your limit order 2 ticks below. Guys, that's your entry. That's your highest probability trend trade entry. This is your path to success. Great entries create manageable trades because when you understand where the market is most likely to continue, it puts you in a position to understand where the market should not go, guys. At initial stops, your protective stop is placed where the market should not go. The market should not blow through that retracement zone. The market should not blow through those areas inside of triggers if this is going to be one of those 70 to 80%. But anything that wins 70 to 80%, it loses 20 to 30%. We can minimize our losses with intelligent stop placement. And if they push up through all of that good stuff to make it bounce down, I don't want to be in the trade anymore. My advantage is gone. My edge is no longer with me, and I will take that loss. And as long as I followed my rules, that's just a cost of doing business. If I broke my rules, it's an avoidable loss. 5 ticks below the triggers, 5 ticks above the triggers. But more often than not, with everything going my way and following my rules and all those advantages, I'm going to get a reversal bar in the direction of the trend, guys. This is what we call a confirmation bar. When rules are met, a reversal bar in the direction of your trend confirms that the market is doing everything you hoped it would do. I'll move my stop 2 ticks above it for a short. I'll move my stop 2 ticks below it for a long. And it still doesn't guarantee a winner, but even if everything goes wrong and I take one of those losers, it's a tiny little loser. It's a tiny little loss, guys. And it doesn't affect the bottom line the way putting a stop way beyond my advantage being gone does. So, defining entry allows you to begin management. Great entries create very manageable trades. They reduce risk, they maximize profit potential. But we've got to know where to find our advantages. We've got to know how to define our entries. So this is where those tails come in. Large chart has strong trigger lines. Small's above the large are wide. They're angled in the direction of the trend. The space is there. The odds are favorable. I love this look. Price has not reached an area. We're going to take this picture because I think this is a great lesson too. When I make the decision to take this trade, guys, it's happening at the top of that bar. And I've got a whopping $80 worth of profit potential to get to that area. This gets new users. This got me, so I like to talk about this, guys. There's nobody in their right mind that says, I'm going to take this trade for $80. $80, oh, nobody gets excited about $80. But I want you to remember, at this point, this is where I'm waiting for the reversal bar. This is where I'm waiting for my small chart to say, hey, the small crowd's here and they want to fight. This is where I'm defining areas inside of favorable large triggers. And guys, from my entry to the same trouble, suddenly, whoops, I draw arrows everywhere. Suddenly I've got about $340 worth of profit. This is why we're buying and selling pullbacks. This is the pattern that you have to recognize. This is the pattern that you need to study. And the easiest way to study it, the best way to study it, isn't to keep taking high probability trend trades hoping you get it right. It's to wait for a market to have momentum. It's to let a market have a clear path and to make sure that I have areas inside of favorable large triggers. And you guys notice how my line was not inside of the triggers? And look what it did. It blew right through it. Rule number 3 would have kept you out of a potential loser. Let's go to crude, because I think we already circled some on crude, right? We'll circle one more on that potential to break. But I want you to see, if I circle that tail, guys, I can't make this up. This happened 4 minutes ago, 6 minutes ago. Can you give me a why, especially you guys that are new? Large chart said down. Let's take away the cheater. And let's go through an entry together. Large chart said down. Large chart said odds favorable momentum. Large chart said that blue line had the potential to break because of all that momentum. New users, give me a why. Chopper, do you see it? ASMB? The large chart led the way. Strong triggers, potential to break. Let's look for an opportunity. Let's look for an entry. Let's watch that small chart And this is what it's doing. It's just going down. And it keeps going down. And it keeps going down. And oh my gosh, I have to jump into this market. I have to jump in. I have to be in this move. Guys, you don't. Wait for the reversal bar. There it is right there. There's my reversal bar. Step 1. I'll just steal this box. From the lowest point of the trigger lines, where's the other side of that box? Man, that's a big box. From the lowest point of the trigger lines to the highest point of the trigger lines, this defines where the market is most likely to retrace. Are you guys with me? This market has a fighting chance of going from here to there. That's the most likely zone for retracement. Everybody's with me, right? That's what the triggers do for me. They define the retracement zone. The market is most likely to bounce from that midband and that resistance inside of triggers. That is a 5-tick zone, ladies and gentlemen, a 5-tick wide box where the market is most likely to continue. Your job is to right-click, hit sell limit 2, and put it about 2 ticks below that midband. And this is how you've defined your entry. And you'll do this while that reversal bar is still fresh. And then it'll come to you. And you'll be like, oh man, here we go. Maybe I should jump in now. Maybe I should get in right now, because what if it doesn't make it, right? I watch you guys do it all the time. Your stop, guys, your stop's right here no matter where you enter that trade. And it gets closer and your guts start twisting. And you're like, oh man, maybe I should jump in. Maybe I should get in. Maybe I should break my rules. 1, 2, 3, 4, 5 bars into it. And you've been watching this happen for 2.5 minutes now. For 2 minutes, you're waiting. And look at that. It hits your entry. I skipped ahead, sorry. It hits your entry. And guys, you're in a short trade at 75.61. You have momentum. You have the potential to break. Your stop is where the market shouldn't go. Your entry is right where the market should bounce. And the next bar goes through and you're down 20 bucks. And every one of you just puckered a pleat right into the center of your chair that's going to take professional help to get out. Because now you're seeing red numbers. Am I still in the area where the market is most likely to continue? Absolutely I am. Guys, you've got to learn how to not focus on the little fluctuations. You got to learn how to focus on your rules. Let's see what the next bar does. One of those magic reversal bars. Watch this. I go from 14 ticks of risk, 2, 3, 4, to 3 ticks of risk. That's my new stop. Look at all this momentum. And guys, it's Downsville, population U. And look at where that box on my small chart, where I defined my entry, where I took that great entry, where I reduced my risk, where I maximized my profit potential. Look at where it lines up on the large chart. Right at the top of the tail. Guys, I don't have to trade the tails. I trade the pullbacks to resistance inside of favorable large triggers, and everything that we just witnessed, the reversal bar, the pullback, and the continuation of the move, all happened inside of one bar. So ASMB, Chopper, who else is in here? Organic Tra, that's a new one, question mark. Large chart told me to look for an entry. Do you notice how nothing changed on the large chart? The large chart still had momentum. The large chart still had the potential to break. The large chart's still in a downtrend. My small chart told me exactly where I needed to enter that trade. That small chart allowed me to reduce risk. That small chart allowed me to maximize my profit potential. Ladies and gentlemen, this is what I talk about for an hour every morning. Because once you can see this trade, Once you can find that spot, once you can do this, ladies and gentlemen, it's going to open the door for all the other trades. So let's go find the other circle. There's one right there. Absolutely, ASMB, we are taking a short trade with direction, with momentum, with the potential to break, and we're doing very well with it. We certainly capitalized on that one. So here we go again. This, all we're doing is studying. We're going back historically. I need you guys to give me a why. Do you see the momentum and the potential to break? Momentum first, potential to break. From reversal bar, and guys, this is those split triggers. Look at how big the retracement could be. That's huge. But it gets better. Check this out. From the lowest point of resistance to the highest point of resistance is a much smaller zone. And let's just see what it did. There's my lowest point. There's my second point. It was the second point that it bounced off of to continue down with the trend. Pretty cool, right? Do you see how your risk, and this is one of the things I want you to see because this is a decision that you guys will have to make. Your initial risk had to be all the way up here where the market shouldn't go. Your lowest point of resistance is all the way down here. Guys, let me show you what the risk is on this trade. That's huge. That's a lot of risk. So I'm going to give you a little secret, and I believe Jen showed us a picture of this. This is going to help. Guys, when I have this much risk on a trade, one of the things you can do, does everybody remember that once you get a reversal bar, once you get that push down, your new stop is 2 ticks above it? As you can use that reversal bar to confirm that the market is doing everything you wanted it to do, and use a reversal bar for entry, because now your risk is a third of what it would have been. Does that make sense, everybody? If you look at your entry and you say to yourself, hey, this is not my best of the best, I'm going to insist that the market confirm. And it worked out just fine. It went right to Fibonacci support, just like we wanted it to. And guys, I'm not making this up. Hold on. What is... Hopefully I click on the right one. There's the exact same trade, ladies and gentlemen, taken by Miss Jen. The exact same trade that we just talked about. All that momentum, potential to break. Notice how she labeled it 50-50. She didn't even label her momentum because she can't have a 50-50 without odds favorable momentum. The market pulled back. She didn't like the split triggers, so she entered on confirmation. 4 lots, took the last one off at the fib. Everything that I just talked about, everything that is basic, everything that is foundational, Jen took that foundation and capitalized. And she went from 03 to 92, 4 contracts. That's $440 worth of profit, ladies and gentlemen. And it only took her about 4 minutes to make it. Jen, thank you for posting that. That is an outstanding lesson that goes back to everything that we just talked about. So guys, our job is to learn some basics. Your job is to get some foundation. But you have to know the difference between a termination, a potential to break, and broken. And guys, this one only had the potential to break. And it pushed up higher. Lost some momentum when we didn't have a clear path. So, that's my first hour, guys. My first hour every day is the exact same hour. And organic, welcome. Welcome to the room. And you are going to love it, guys. You're going to love everything about this room. Because this room takes what most people think is such a complex thing and makes it very simple. And I believe it makes it very easy to learn. And if you allow it to be easy, you will learn it, guys. So, Chart Reading 101. I'm going to give you all of this stuff. I promised you everything you need. You're going to get it. Chart reading 101. In order to get to where you want to be, you have to be able to recognize some looks and patterns quickly, guys. This is going to reinforce the lessons. It'll speed up the process of becoming a chart reader. We all want to get to the finish line, right? This is the way to do it. I talk every day, and I tell you that trading is awesome. Simulating is great. But it's what you do when you're not in a trade, guys. Go take pictures. Take pictures of strong triggers, of weak triggers. You can do it historically. You don't have to be in a trade. No worries, Jeffrey. If I go through it and you're not here, just let me know when you're back. I'll go through it again. Take 25 pictures of strong triggers and of weak triggers. Know the difference between the two. This is important because you're following rules. Take 25 pictures of a clear path and of terminations. Take 20 pictures of long entries. Take 20 pictures of short entries, guys. But the task is not just to take the pictures. Annotate your charts. Write on your charts. When you guys downloaded software, all of you first day guys, you got TechSmith Capture. Open it up. This should be open every time you're sitting at your computer. TechSmith Capture is how you're going to take pictures, guys. TechSmith Capture is how you and I are going to have a conversation. So if I'm taking pictures of strong triggers, whoops, that's my small chart. Where's my big chart? I'm going to use TechSmith Capture, and we're just going to do one together. TechSmith Capture is click and drag. You can see my little target there, right? So if all I want to do is take a picture of strong triggers, I can left click and drag down, and then I'll drag over, and that's all I need for strong triggers up. I'll take a picture, and it'll give me an image preview. Your image preview gives you the ability to have a conversation with me, to have a conversation with yourself. There's arrows. Everything is click and drag. So if I left click on my chart and I drag down, I get an arrow right to that space in between the small and large. I can do a shape. Click and drag. Put a box around it. Have fun with that, Ron. But the most important tool that you will ever use in this capture program is left click and drag and create a text box. And guys, that's a lot of text. You should see the cursor blinking. That lets you know that you're able to write in it. And you have to make sure that your font color, black, is different than the background or you'll never see it. This is what I want you guys to write. I want you to say, smalls are green, large are green, background is green. That has to happen to have strong triggers. Smalls above large, both wide and up, space between. This is strong triggers. This is odds favorable momentum. Rule 1 met. Guys, how long did that take me to type that out? Not everyone types it the same, but this picture from start to finish was about a minute of my life. That's it. About a minute of my life. You can click copy down here if you want and drop that picture into the room. Copy paste, or if you're in the pop out, you have to hit Control V to paste in the room. And now you can say, hey Mark, I just wanted to make sure that I had this right. Give me a little feedback, and absolutely I will. But what you really need to do is you need to click that upload button. And what that upload button does for you is it gives you a screencast link. It gives you that picture in the cloud. Click copy. If you want, you can paste pictures in the room with the screencast link as well. But what you really want to do with that picture is go to the basic rules. Scroll to the bottom, and you're going to right click and you're going to paste that screencast link in there. And guys, that's a lot. That gets pretty ugly if you just leave the link. So what you can do is you can go to the Insert tab, and this is all on the first tab. How to do this is all on the trade tracking sheet. You can go to the Insert tab. Where do we go? And click on the link button. And it's going to let you take that web address, drop it into the address bar like you're going to Google or eBay, and under text to display, just write strong. And there's number 57 of strong triggers, guys. And what you're going to do is you're going to go through this process. And it's overwhelming. 25, oh my gosh, that's a lot. Do 3 a day. Do 5 a day. Do 10 a day if you have spare time. But what happens is that if you are taking the picture, if you're annotating the chart, if you're describing the advantages, what rule it goes with, the time that you spend typing, analyzing, posting, it creates this neurological connection between with what you see and what it means to you. And ultimately, you'll piece these individual looks together to create a trade so that you can recognize the whole pattern. But if you break it down individually, guys, what it does is it makes it not so overwhelming. If any of you are like me, there was a point in my life where I had to lose 50 pounds. And losing 50 pounds, if you set 50 pounds on your desk, that's a lot. And most people stop diets because at the end of the first week, they're down 1 pound and they're frustrated about the 49. They try to take on the whole task at once. But if you lose 2 pounds a week for 25 weeks, guys, in 6 months, you're right where you wanted to be. It was never overwhelming, and you had a lot of little victories along the way that feel good, that build self-esteem. Don't try to be a trader in the beginning. Try to be a chart reader. So as you go through this process and you use this exercise, I'm also giving you this, the high probability trend trade checklist. This is literally a checklist for the high probability trend trade. It's not just a clever title. The first page goes through, is the market coming from a strong top or bottom? There's an awesome video that my brother built about recognizing areas that may hold, that have held. But you can take a trend trade without it. But that's what it is. It's a no triggers through termination that reverses the market. And it sets you up for the best of the best, the highest probability. Do I have strong triggers? Or do I have weak triggers? So as you're taking those pictures, this is your cheat sheet as well. Did price reach an area and no triggers are through and it's not broken and it's no clear path and rule number 2 is not met and I should sit on my hands and do nothing? Does it only have the potential to break, which means that it's still not a high probability trend trade, but I do know that there's going to be some opportunity? Or is it a clear path? Do I have momentum? There's one of those tails, maybe a potential entry. Know the difference between the three, because this says no trade, this says manage assertively, this says hell yeah, let's go. And exactly how to define your entry, whether it's a long trade or a short trade, exactly what you look for, where your entry goes, where the market should not go. And then the second page, print it out, put it on your desktop. There's like 5 of them on there. There are people that laminate these and just use a dry erase marker, same thing every day. I'm going to give you guys this as well. And then trading without a plan, guys. You ever heard the old adage, fail to plan, plan to fail? Every successful trader that I've ever met has a written plan. Every successful trader that I've ever met knows exactly why they will enter the market and precisely why they will exit. This is the KISS plan. This is the Keep It Super Simple plan, or the Keep It Simple Stupid plan. Depends on where you at in the PC scale. Guys, this is a stepping stone in your learning journey. This is the first trade, your foundation trade. This isn't your get rich trade, but rather this is the trade that teaches you to recognize your get rich trade. It's designed to optimize your chances of success with the high probability trend trade. I like the phrase, optimize your chances of success. This isn't the only way to do it, guys. This is the best way to do it. And only you can make the decision if you want to do it like that. But through simulation, through study, through class feedback, through continuous practice, you will craft a plan tailored to your personal goals based on your ability reading the indicators, your experience reading the indicators. Guys, when you can read your charts, you will see more. And if you choose to take more, that's great. And if you choose not to, that's okay. This is enough. I've had people use this KISS plan and get funded in prop firms in their first 30 day with Nexgen by learning the rules and then by following the rules. Morning, Wayne. Keep it simple solution, Gary. You were a Navy man. It was probably keep it simple shithead for you guys. I've got Navy friends. I know how you talk. Guys, your simple plan for consistency. Don't fight the large chart. Your simple plan for consistency. Don't fight the large chart. Don't fight the large crowd. The path to financial suicide. How to commit financial suicide. One easy step by John Novak. Yes, sir, Gary. Chapter 1, warning sign your friends are in trouble. They're trading against strong triggers. A very common rule break, because you get excited about Fibonacci because you know how powerful it is and you go counter when maybe you shouldn't. Chapter 2, warning signs your friends are not paying attention. Hold on. That's beautiful, Wayne. Man, you guys got some. Warning signs your friends are not paying attention. Where'd my pictures go? They trade in determination conditions. They trade in determination conditions. They trade into areas where decisions are being made. They trade into areas that could reverse the market, that could stop the market, that could create a bounce. Seek help immediately. Ladies and gentlemen, I am that help. If you post in my room, I will recognize the patterns in you and I will give you a plan to fix them. So you have to define your entry. No, I don't, Rob. So, Rob, this classroom, I'm glad you said that. If you are a parent, if you have children, and you were a child once yourself, so you'll still understand it, how many times have you told your child not to do something because of your own experiences? Don't do that, it won't end well. I know because I did it when I was a kid. And you tell them, and you just want them to believe you blindly, right? You want them to say, okay, I won't. You've done this, you're smart. Guys, I've made every mistake you could ever make, and I'm teaching you how to avoid them, but like Rob said, you're still going to do it. Don't hide it. Put it in the room. You'll learn it. Don't touch the hot stove. Guys, we all touch the hot stove. Every time I go to a Mexican restaurant, they say, be careful, this plate is hot. The first thing I do is grab it with both hands and put it in front of me. Don't you tell me how to live my life. Most people are like that. You've got to make mistakes. It's okay. Just post them in the room so we can learn how to fix them. Define your entry, guys. Define your entry. Why are we defining our entry? Because great entries create manageable trades. Great entries reduce risk. Great entries give us more profit potential. No, I spent 10 years managing Tex-Mex restaurants. I have no feeling in my hands anymore. I used to grab 400-degree plates right out of the oven. Guys, define your entry. Learn how to follow the rules. Learn how to embrace advantages. Learn how to identify advantages. And get in where the market is most likely to continue, because that's the beginning of your management plan. Once you enter that market, guys, you have to do something with it. This is where new users, ASMB, who else? Bob B. the Man, Rob even, right? Guys, this is where your palms are going to get sweaty. This is where your stomach is going to begin to turn. This is where you're going to start wanting to fearfully move stops and targets, guys. Your management as a brand new user should be every bit as mechanical as your entry. If I have this, then I'll do that. And there's no exceptions, right? We're learning how to remove emotion. We're learning how to increase our chances of success. The KISS plan does two things. Well, I'll say three things. The first thing it does is it gives you a clear roadmap how to get in where the market is most likely to continue. It gives you solid, provable, testable, repeatable, verifiable rules to get you into the market where the market is most likely to continue. You have to learn them, and you have to trust them to take this entry, because that's where you're going to have the least amount of risk with the highest chance of success. Once you enter, the KISS plan is designed to do two things beyond that great entry. It's designed to get you paid. When I wrote this management plan, I wrote it understanding that success creates confidence. And getting paid is the goal of trading. And you're going to train your brain that it's okay to get paid, that it's all right to get paid, that every hit doesn't have to be a home run. For you new guys that are in here, if you've never watched Moneyball with Brad Pitt, go watch it. The whole premise for building that A's team was that they get on base. Not that they hit home runs, that they get on base. Because if you get on base 4 times, you have a home run. So if I enter where the market is most likely to continue, then my stop goes where the market should not go, and there's nothing for me to do. The plan also teaches you where to put your stops. If I enter where the market is most likely to continue, then my stop goes where the market should not go, 4 to 5 ticks below those trigger lines. And then I am powerless. I'm either going to get stopped out. Guys, small losses are a normal part of a positive equity curve. Anything that wins 70 to 80% of the time is obligated to lose 20 to 30% of the time. What else do I say? It's a cost of doing business, guys. It's paying rent. It's buying supplies. You're either going to get stopped out, or the market's going to give you a reversal bar in the direction of your trend, in the direction of your trade. It's going to confirm that the market is doing everything that you hope deep down inside it would do. And if I get a reversal bar, then my new stop is 2 ticks below it. And once again, hands in the air, under your butt, roll back from your chair. There's nothing to do. You're either going to get stopped out for a smaller loss. It's okay. Learn to accept losses are a part of trading. Or it's going to go to your first target. And with this KISS plan, with the goal of getting you paid ASAFP, guys, your first target is $100 away from your entry. On the S&P, that's only 8 ticks. On crude oil, it's 10. It's not uncommon to see you guys take amazing entries and sometimes hit that first target on the reversal bar that lets you reduce risk. So if I hit that first target, there's $100 in my account. That $100 is in there. It's no longer exposed. I got paid. I feel good. My palms aren't nearly as sweaty. The butterflies left my stomach. Hell, there's children out front singing songs about me because of what a great trader I am. I'm going to move my stop to break even at this point. I'm going to have zero risk on the trade because that's going to give me the courage to hold for my second target. Zero risk, zero exposure. I've been paid. I've got absolutely nothing to lose, and it's either going to hit my second target or it's going to stop me out break even. And guys, if it hits your second target, it's only $200 away from your entry. That's it. That's all. You're done. Trade's over. You're out. $300, guys. 2 to 3 minutes of your life. $300 from the highest probability trend trade. $300 in your account, no longer at risk. Life is good. $300 a day. If that is the best you do, every day, 252 trading days a year, you average $300 a day, you added $75,000 to your trading account that year. If you take another trade, goes break even, you're in 6 figures, guys. You'll probably, if all you took was high probability trend trades, you'll probably take 4 to 5 trades a day. $500 a day is pretty easy. It's a pretty low guess. And once you learn the software, you're going to say, man, that's too easy when I follow the plan. And you start having more realistic expectations of what you can accomplish with this software if all you do is learn how to read your indicators. I'm going to give you this as well. This is what I call exit conditions, because there are 2 things before you ever go live you need to know. You need to know why you will enter a trade. It's very clearly mapped out in your KISS plan. You need to know why you will exit a trade. It is very clearly mapped out in your KISS plan, guys. And rules are nothing more than patterns that have been proven to win more than they lose. That's it. You have to go back. You have to test it. You have to practice it. You have to get feedback on it. You have to trust it so you never skip that trade. Exits are nothing more than your advantage being gone. If I'm in a high probability trend trade and my targets don't get hit, it means that my stops got hit. And initially they're where the market shouldn't go. Or it means that maybe I got one of those 3 divergences in the same price range, but you have to know why, guys. And rules help remove the emotion. You will never know what the market's going to do, but you can know that the pattern you're trading wins more than it loses. So you never even have to worry about what's going to happen next. Just let it happen. Good news, warm here in San Diego, projected high 78. Bad news, wind gusts from 30 today to 45, 50 under fire watch. Oh, man. Steve, I hope everything's good. I hope everything works out. All right. So the one thing that I did this morning, and I do it every morning, and I say it loud. I shout it from the mountaintops, right? Is I tell you that my promise is that I will give you anything and everything that you need to be successful with this software. We learned the trigger line, the Fibonacci rules for when it's okay to trade, right? We covered them individually. We talked about how to study them. I gave you the spreadsheet. I'll do it again right now. You guys have the ability to simulate. Even more importantly, you have the ability to get feedback on every question that you have, on every picture that you take, on every trade that you take, on every chart read that you have, on every study session you go through, guys. 15 hours every week. My sole purpose in life is to talk to you about what you see and whether you're seeing it right. You can simplify. You have a plan. All you need to do now is learn how to work your plan, learn how to follow your rules, learn how to recognize your advantages. I just dropped below the spreadsheet. So guys, in the chat box, you newer guys, whoops, get over there. Get over there. You have the trade tracking sheet. I just dropped in there. You also have an all you need zip. You can download it into your download. You can drop it. You can click and drag it over to a folder if you want. Inside of the everything you need folder is the PowerPoint that I used to teach. Is Chart Reading 101. You'll find that in there. It's the high probability trend trade checklists. It's the KISS plan. It's the daily goals. It's the exit conditions. And there's one more thing that I like to talk about before we get into the second half of class. And I drug this one out. I know I have a lot of new people. The key to everything that we do, ladies and gentlemen, is having a foundation. And I can't stress that enough. Understanding the basics and then just compounding a bit each week. Understanding the simple and then making it a little more complex as it becomes easy. So for you brand new users, I blanket with very conservative rules, recognition of advantages, give you a solid plan that optimizes your chances of success as you learn to read your indicators. You brand new rules are going to feel like I'm trying to keep you out of the market. You brand new users are going to feel like I'm shackling you to this one trade that only happens 3 or 4 times a day. But the reality is that momentum isn't going to be in every trade you take eventually, and termination conditions might be present, and you may get in from areas outside of the trigger lines, but as a brand new user, you don't know when to make exceptions. How could you? So we try to optimize your chances of success. We try to increase your likelihood of success because success breeds confidence, guys, and that's what keeps you around and keeps you focused and keeps you studying. And I believe in the software 1,000%. And I want you here, and I want you learning the software, and I want you asking questions because I want you to be successful. Just like anything, the more time you spend with it, guys, the more you're going to see, the more opportunities there are. But you have to learn. You have to learn the process that yields results. And the results seem to follow. And that's where the KISS plan comes in, guys. If you keep it that basic, if you follow simple rules, and if you're okay not taking the trades that you see other people posting in the room that aren't high probability trend trades, if you understand that you will be there eventually, but you're not there yet, you can find an extraordinary level of success. I've seen it for years. I've been doing this for a long time, it feels like. The further new users deviate from simple, the more you look for trades instead of advantages, guys, the longer it typically takes you with pattern recognition. So we're all chomping at the bit to get into the market, but you should be chomping at the bit to understand why you should get into the market, why it's okay to pull the trigger. And then question everything. Question everything. If it doesn't make sense, ask me to clarify. If the picture goes against what you're thinking, ask me to clarify. If you think you see something but you're not sure what it is, ask me to clarify, guys. The most vocal people in this room will get to where they want to be the fastest. There's no doubt in my mind. Give yourself a little grace. That one's for my wife. Give yourself a little grace. You're brand new, guys. It's okay to be new. It's all right to not know everything. It's okay. Learn the basics, grow from it. So that's my first hour. That's my first hour every day. Welcome to Nexgen, you guys that are new. Guess what? Tomorrow is going to be exactly the same. The first hour tomorrow won't take an hour and 40 minutes the way this one did. I know I've got a lot of new names in here. That's why I kind of drug it out. I want you guys to see this. That's not the one. Drinking from a fire hose. I didn't want the GIF. What's it like day one? That's it. That's what it's like day one. Feels like there's a lot coming at you. I know that it does, which is why I encourage you. Learn momentum. Take a day, one day out of your life to learn momentum. That's all it's going to take. Give yourself 3 days until you always say, did price reach an area? Where are my triggers? Maybe give yourself another 4 days. Find those great entries. Learn how to follow the KISS plan. Learn how to manage very conservatively before you try to make all the money. And this goes away quickly. By the second or third day, you understand the language. By the second or third day, most of you will be picking out these great entries. One more thing I'm going to drop in the room. I wrote this over the weekend, I think last weekend, because I wanted you guys to have the most basic form that I could ever come up with in my entire life. And this is the Trend Trade Simple, guys. It talks about why I do what I do, what you're looking for, and it breaks down that high probability trend trade in 2 pages. That's about as focused as I can make this guy. So I'm going to take 5 minutes. I'm going to go stretch my legs. I'm going to relax for a minute. Maybe refill my water. When I come back, we're going to click on every chart that's been posted in this room. We're going to talk about them in terms of momentum, path, and entry. No matter what kind of trade you showed me, we're going to talk about them in terms of momentum, path, and entry. Remember, if you want to get the best feedback out of me, tell me what you saw and show me your trade from start to finish. And I'm going to let you guys in on a little secret. It's not the winners that make you a better trader. It's posting those losers and coming up with a plan to avoid them. It's not the showing off, the 50 points, the $1,000. That doesn't make you a better trader. It's showing me your weaknesses so that we can turn them into strengths, guys. Remember that when it's time to post pictures. I'll see you in 5 minutes. Go stretch your legs. Second half of class. Is it just me, or did that market just bounce from support inside of triggers with odds favorable momentum and it didn't quite reach the fib? That sounds familiar. It sounds like something that we've talked about today. Remember, as we go through all of these charts, guys, these belong to traders. These are traders' personal plans. There is no right or wrong trade for somebody. It's just their trade. So Jen got us going with a couple of them. And this is, we talked about it, this is the first one that we saw this morning that we went through together as a team here. There's that 50-50 look. It insists on odds favorable momentum, or it's not 50-50. Using a confirmation bar, using Fibonacci for exits. And Jen, this is absolutely beautiful. Really well done. And then after that trade, and I like this annotation, guys. Accountability is a big thing. She says, broke my rules, did not wait for large chart back of price to clear the fib, waited for the small chart price and smalls to clear the fib, entered immediate pullback and held. With the large chart looking so good, she held, target at the fib. Stop was right here. That would have been a huge stop. Broke rules, got lucky. And Jen, I mentioned, are you in here, Jen? Hopefully you're not in the trade. Nexgen has a trade on the website that's called a momentum trade. And what is a momentum trade? Well, you're absolutely right. It depends on momentum. It depends on that level of giddy up. And what you're doing, Jen, this is kind of maybe where Ron picked up the chili dog, is you're saying with this level of momentum, I'm betting the market continues down. That's the thought process behind it. And the entry, are you sure it's inventories today, Pete, and not tomorrow? Usually when Monday is a holiday, inventories happen on Thursday. The idea, Jen, is that price breaks through and snaps right back to the fib that we're saying this momentum has the potential to break. And the hope is that it just continues down. And Nexgen teaches an entry, whoops, wrong one, that is right here. And it's super low risk, 2 up bars and you're out, 2 beyond the entry and you're out. So what you did is you kind of took it right at the bottom. But this is also a great lesson for you guys that take that chili dog, that jump-in style trade. Until you clear that line, this is a very real possibility. This is a very real possibility. Nice job letting the large chart lead the way. But when you don't let the back of the bar clear, that's your entry. That's that momentum style entry. I hope that's helpful. And I think I put a link in there for you as well. You did break your rules. That's all right. It gets luck sometimes. Hong, you think that trading on momentum is the best way to take risk out of trading with emotion? It can be. That's what works for you? I like it. I think momentum takes a lot of the stress out when the market's likely to push. I don't disagree with you at all. I like that you recognize that. I think it's important that you guys understand that momentum is a very powerful tool to have in your arsenal, and it's very easy to recognize. It is very easy to recognize. All right, Pete, we have a couple here. Same one, doing it again, right? Strong triggers, potential to break. Pete takes the momentum entry, takes half off at 10, doesn't give any back, and when the momentum trade fails, turns into the trend trade. I'm not sure about those exits. And then it turns into, Jen, there's your momentum trade. Jumps in, snaps back, bingo, bango. All the way down. Pete, this is some awesome trading. Excuse me. Woo. My apologies to the YouTube people. That was a pretty good sneeze that you had to listen to. This is great trading. This is great trading, guys. This is a jump in trade that turns into a trend trade that turns into a momentum trade. This is what I like. As Pete got paid from here to here, didn't worry about suffering the retracement, and then he got paid from there to there again. Got paid twice in the same range. Pete, outstanding chart reads, outstanding trading. Whoops, that's the same picture. Maybe I clicked on the same one twice. Sorry. Let me make sure. I am notorious for missing Pete's pictures. So I want to make sure that I'm not doing that. There we go. That one's going the other direction. Great looking large chart, but 50-50 and divergence spoiling a party. And I disagree with you on this one, Pete. Respectfully, of course, as always. That's not at all a 50-50. You're trading directly into a divergence high line. 100% the triggers didn't break. This is a textbook termination. Rule number 2 not met. This is an area that could stop the market. 100% termination condition. You're calling it 50-50 on the fib, but price did reach the next area and the triggers didn't break. So I like that you didn't take it, because divergence on a 50-50 kind of messes things up, especially from a weak bottom. But that is 100% as we teach at termination conditions. Price reaches an area, triggers don't break, no trades into the area. Nice stuff. And guys, I'll do that every now and then. And it's not because I want to say, hey, you're wrong. It's I just want you to get the chart read. We got people learning in here. All right, Ron. Oh, and look, there it was. Beautiful termination. It's cool when the next picture shows it. So I hope that made sense. That's why we don't trade into termination conditions. Look at the reaction. And then Ron has the potential to break right here with momentum. He gets in at the mid-band and makes some money. Beautiful. But does everybody see what the market did off of that pink line? Look at that. Look at that catastrophic event that Pete avoided. Pretty cool. And then once it rolled, find a way to capitalize. Really nicely done. And guys, this is one of those you may get resistance after resistance after resistance. And your brain's going to tell you, find an entry, find an entry. You're not making money. You got to adhere to those rules. You got to be solid on those rules. They're designed to keep you safe. 50-50, odds favorable. Jen, this was in 3 minutes. That is rare for oil. Did they drop bombs somewhere? All right, Jen. Can we have, what are we going to call this? What are we going to call this? I don't know. Let's just talk about it. So, and I'm going to resort back to the KISS plan, Jen, because I want you to see where I'm coming from. And I think there's a lesson that you may need right now. You may not. So if you don't need it, ignore me. Please. If you're like, I don't need this lesson, don't take it. But I want you to see something, because I'm recognizing a pattern in you. And guys, this is what I do. I recognize patterns. It's my whole thing. It's the reason that I teach this class. So Jen, we have a 50-50 trade, right? Cool. So when I give the KISS plan, Pete, okay, When I teach the KISS plan and I introduce the rules for the trade, when I say I'm optimizing the chances of success, I literally mean that it is the absolute, positively best of the best, highest probability way to take that trade. Jen, this is your new deal. You are the confirmation queen. Every trade that I've seen you take has been a confirmation bar. Why? Because you don't want to risk getting stopped out, right? But getting stopped out's a part of it, isn't it? And when you have the perfect trade, when you have a strong top, when you have the best momentum on both, when you have nothing, no divergence, Jen, doesn't it make more sense? Doesn't it make more sense in the perfect environment? Use that ability to pinpoint where the market is most likely to continue. I think confirmation bars are amazing. I really do. I think confirmation bars are amazing. And I think that I'm going to use a confirmation bar when my entry isn't perfect. And that's the language that I like to use. If my entry isn't perfect, then I'll look for confirmation because it establishes my risk. But Jen, if it is the perfect trade, if it is every rule met, if it is the highest chance of success with that trade, take advantage of having these areas. Take advantage of understanding where that market is most likely to continue from. There are times where confirmation is appropriate, and there's times where you've just gotta sack up and take that best trade. You can do whatever you want, but I think that you are so convinced that this confirmation bar protects you that you're missing out on some really great trades from some really great areas. And then Boaz, absolutely. So Boaz asked, this is such a great question. Jen, you do whatever makes you comfortable. Let me stress that. I'm not telling you how to trade. I'm telling you a pattern that I noticed that I think should at least be brought up, and then you can choose what to do with it. Boaz asked, so on the big chart, the fib is coming from the 5-1 chart. Is that the same power like the fib from the 13-2? And the answer, Boaz, is 100%. 100%. So every time I teach termination conditions, I don't ever differentiate between Fibonacci resistance, whether it is a 5-1, 13-2, or the 21-3. I don't give that any more power than a divergence high, than a 1-to-1. And the reality is, on a large chart, if price reaches an area and the triggers don't break, it's a termination condition. And one of the cool things, and I don't know that my brother did this on purpose when he made this picture, is the market stopped at a 21 fib here, it stopped at a 5-1 fib here, and it stopped at a 13-2 fib here. I don't think he did that on purpose, but it really does. It illustrates. And I was so into ranking them when I first started. Well, 13's bigger than 5, it has to be more important. And 21's bigger than 13, it has to be more important. Great question. Thank you for asking that question. And honestly, Boaz, it came from a divergence high, not a 5-1 fib. Pretty cool, right? It came from a stupid little pink line. So good lessons. And guys, sometimes I'll give you lessons that you may need, that you may not need. Jen, I'm not saying that you have to set a limit order. I'm saying that you maybe go back and look at a couple of them. But when trades are perfect, I go into wild horses mentality. When I know it is my absolute positively best look, I want to take advantage of that trade. And if they come get me, man, good on them. Great for them to be able to come get me. Jeffrey Dean, are you back in here? Pete, termination condition, strong triggers, don't need to know it's your girlfriend's account. There's that momentum trade. Breaks through, snaps back, giddy up. Perfect trade, Pete. 100% beautiful. There's that momentum trade. There's that 50-50 trade that we talked about. I think that's the one that I missed. I think that was the one that I double-clicked. And Jeffrey Dean, I see you typing, so I'm going to say the answer is probably yes, you are here. It's okay, Jen. Be a scaredy cat. I think that's what I want to stress, is that it's okay. If you're not 100% comfortable and that confirmation bar makes you more comfortable, don't ever abandon it. Don't ever let it go. Cling to it. Maybe that'll change over time. It's all right. But remember, this is an education class. So I am obligated to throw that other option out there, that getting it at the area does make sense. But I think that's a great thing. If it makes you comfortable, stick with it. So Jeffrey, never seen small triggers like this. Where would this fall in a category? Small's outside of the large, larger wide. Wouldn't that just be odds favorable momentum? You're having a little brain fart? Happens. And then Peace Chart answered your question. Okay, cool. And man, if you have a question that's a right now question, like if I'm talking about trigger lines and you've got a trigger line question, go, hey Mark, trigger line question. That way I'll stop. I'll address that instantly. 100%. And then Pete, I think we saw these. Yep. Okay, I just want to make sure I don't skip you. I don't know what it is, Pete. I think every now and then yours seem to be the ones that I miss. And it's not intentional, I promise. All right, 10K. You never saw that before. It happens. It happens. I love strong triggers on a small chart. Especially, and this is one of those things I like you guys to think about. If I have strong triggers on the small chart and the large chart, that's just like double whammy. I love it. I feel even better about it. All right, 10K, let's see what we have. Termination, else it was a good trend trade. It's okay. So you had a good top, you had momentum, and this one had the potential to break. It was right on that 50-50 range. Do you see it? Where your small triggers got below that line, 10K, but the large triggers didn't quite. So that's that potential to break. And this is the one that I just talked to Jen about. That is the perfect. Yeah, man, I was the hindsight's 2020 guy for a long time. And that's one of the reasons, guys. The more you give yourself to think about, the more likely you are to miss something. And that's okay. This was the perfect trade. The perfect trade. Absolutely, 100%. You've got a lot of pretty colors on your charts. I love it when people modify to make their charts the way they want them. They don't have to look like mine. Not at all. All right, let's see what this one is. Woo, we got a novel on this one. Turned back from previous divergence and made a strong, get off of there. Made a strong top. Odds favorable momentum. Could not resist the price reversing from the fib on small. Not an ideal entry. Mid-band is not inside of the triggers. Took it from the mid-band. Stayed behind the reversal bar on the second to the fib. Out of the reversal, closed to the fib. Missed the target by 2 ticks, 11 and 28. Did not pay attention on big one, large one-to-ones. Should have been above that. And that was right there at 54, 53.9. Yep. This is beautiful, though. You have all the momentum. You've got a clear path. And you made a choice. You said, hey, and I like this. I have a strong top. I have odds favorable momentum. I have areas, and they're inside the retracement zone. And you said, I'm going to take it from the mid-band. You knew you had your initial stop. And then once you got the reversal bar, that stop went way down. You take profits at the first trouble because it could retrace up to there. Love it. Never comes close to your stop. And yeah, just the difference between a couple ticks being on the wrong side of those one-to-ones. 10K, this is a beautiful trade. This is an awesome chart read. This is so many advantages. And I think the only mistake, if you want to call it one, is that you forgot that one-to-ones could stop the market, and you put your stop on the other side. And I know we talked about this the other day too, maybe not with you. Guys, you know where these decisions are being made, right? And there's nothing more frustrating than missing your profit target because it bounced right at the area that could produce a bounce. I love this trade. I love your annotation too. It's awesome. Cost you 13 ticks. And man, it feels good when you get out. One of the things I do, guys, when I recognize trouble, market was hard to trade today. I know that divergence low could create a problem. I'm getting out a tick below it, always. Tick below it. I'm out a tick above, always. My goal is to get paid. It's all right though, 10K, because you still took a great trade. You still made great money. And now you've got an awesome lesson to carry with you into your next trades. Great posts. Great annotations. Awesome annotations. All right, Steve Diego. Odds favorable. Room to the target. Enter at the mid band. And you are so tight on this one. And this is NASDAQ. So, all right, so little NASDAQ thing, Steve. Pink one-to-ones are termination conditions on the NASDAQ. Pink one-to-ones fall into the areas that could stop the market because the NASDAQ is such a huge time frame, which means you had a 50-50 trade here with two divergences on it. And two divergences just pushed it lower. Gotcha. And then you got back in on the reversal bar, and then a third divergence prints. And it looks like you chose to enter. And it pushes down. And then you should have entered on the reversal bar, or maybe not at all on a 50-50 with three divergences. And then when it breaks above, pulls right back, and that's the perfect one. And then off it goes. So let me read everything, make sure I'm not missing anything. Small triggers are a full bar away, so you entered at the area. I like it. 2 ticks below synthetic triggers seems really tight, Steve. 2 ticks below the synthetic triggers, especially on the NASDAQ, feels super tight. I mean, you only lost 130, but you could have just stayed in that trade and ran the duration. And I think the understanding that this is only a 50-50, where are we at? This is only a 50-50 and you already had 2 divergences against you, might have made you even more inclined to wait for the reversal bar to close on the correct side. And then you're in a better position. And I think the same is true right here. We've got 3 divergences in the same price range. And you choose to enter, which is cool. Stop kept you safe that time. And off it goes. So, good stuff, man. Good trades. Little nuanced things. Little nuanced things. I think the biggest one is that pink one-to-ones can stop that market on the NASDAQ. Strong piggyback triggers. Not really. Cleared room. You had room to the target. And it just went that way. You did have momentum on the small chart. Everything set up and clear on the large chart. Easy to capitalize right at the area. Nicely done, Steve Diego. All right, Buzz. Good to see charts from you. Let's see what we have. Everything says up. Market is strong. It didn't quite reach the fib. You take the pullback to the mid band, right inside of triggers. Great stop placement. And it looks like you got out right at trouble. Nicely done, dude. Great trade. What a great looking trade. All that momentum, Perfect entry, beautiful stop placement, out at trouble. I'm not sure you could have done that any better. Those are the ones that feel good. Those are the ones that feel easy. I really like what you did there. Let's see what you did on the next one. Same thing. Exact replica. Love it. And then just a little idea that sometimes the market goes crazy. All right, Steve Diego again. This one's gold. Really? Odds favorable, clear path, take an entry, make some money. Odds favorable, clear path. Steve Diego, when Ron's not here, you carry the torch as the mayor of Momentum Town. Nicely done. Odds favorable, nothing in the way, room to the fib. Find a way to capitalize. Not a high probability trend trade, but an outstanding trade. Really well done, Steve. All right, Joel. Odds favorable, clear path. You get into the area inside of triggers. Beautiful, Joel. I'm not sure what divergence you see to get you out. Get out at divergence. That must be this one. Take the first off it, the divergence. And then the second one, you just tightened up when you started getting close to the fib. Great trade, Joel. Man, we made it through all the pictures, ladies and gentlemen. So what's happening in the world right now? There's crude oil. Termination reverses the market. Wayne, oh, sorry, one more. My bad. Thank you. Odds favorable. First was a jump the fudge into a fib. Second had more room. So the first one, you're like, oh crap, it's going without me. And it bounces right into a fib. The second one is still into a fib that's already held twice, given two divergences, and you said to hell with it, I'm going long anyway. I'm assuming you had a reason. And you got out. And that's cool, but Wayne, you know that I'm obligated. I'm obligated to say, you know, if you had traded here, jumped in, hit the fib, love it. It told you once, no. It told you twice, no. And man, that's cool. There's a lot of momentum there. You're playing the odds. You're saying momentum will go. I find, and again, guys, I don't tell anybody how to trade. That's not my job. My job is to teach you to read indicators. My job is to discuss momentum, path, and entry. And I think on this one, I'm going to play the card that great entries create manageable trades. The great entries and momentum can cover challenges. I'm not even going to call it mistakes. You knew what you were doing, Wayne. With this much momentum and that good-looking entry, Wayne said, you know what? It's worth a shot to me. It's worth a shot to make some quick cash on the way in. And you did it well, dude. Nicely done. For the rest of you that are brand new, hell yeah, he traded directly into a termination condition. 100%. And he weighed out his options, used his chart reading to decide if he was willing to accept the risk, to see if they went back with that much momentum to retest it. Nothing wrong with it. Nothing at all. Is it high probability? Of course not. Doesn't have a clear path. Is it a hell of a chart read and a well thought out entry and an even better thought out exit, understanding the challenges? Absolutely. So Wayne, tip of the hat. What you can do when you can read your software. What you can pull off when you can read your software, guys. Good stuff. All right, what do y'all want to talk about? What do you want to talk about? That fear of missing out still nags at you? Yeah. It nags at everybody, Wayne. I like it. So it used to be in the glossary of common terms, the fear of missing out. And to be honest with you, I'd never even heard of FOMO until a couple of years after I started teaching with Nexgen. But the definition that we had in the glossary of common terms was that the fear of missing out will cause investors to make bad decisions. The fear of missing out will cause investors to increase their risk, to minimize their profit potential, to take the wrong entries. And the only thing that the fear of missing out does for you is it assures you that you'll take a bigger loser if it doesn't work. So I think everybody has a fear of missing out issue. Jen, am I beating you up? You are if you need it. I love that. All right, let's line your circles up. Odds favorable momentum. So can we talk about your circle placement? This will be for you, not for me. So, whoops, wrong one. I just want you to see this. Back of the bar hasn't cleared. Back of the bar hasn't cleared. Back of the bar hasn't cleared. It clears on this one that's outside of the circle. And this is like a housekeeping thing. Does that make sense? It clears on the one that's not even in the circle. And the reason that becomes important, well, okay, so I'm going to do two things for you. I think that the reason that becomes important, let me show you on a chart, and then we'll go back to your chart. If I circle where I actually get the clear path, right there, the circle comes over. So you did it beautifully. You had odds favorable momentum, the back of the bar cleared, and you did wait for the bar. You just put your circle off a little bit, no worries. And that would have been in your entry right there, but it already started its way back up, it looks like. So you get in, and with this look, it just never hit your stop, and you got out at 1-to-1s. I don't think there's any reason to beat you up on this at all. I think you followed your plan beautifully. I can't see what your entry price was, but everything worked out very nice. You followed your large chart one. You need to move large chart to sim. That will, oh, that's what it is. I don't know if it matters if it's sim or not. It will for showing you the entries and exits. Let me see. If I put that on a live account, the circle is still there, even if I change the accounts. So double click on your large chart drawing and make sure that they attach to all charts. Excuse me. That may be what it is. Yay, we learned something today. I love that. No, this is a beautiful trade. Follows every rule that you have in your arsenal, Jen. Great job. How do we feel about termination conditions, even with momentum? Look at that. Isn't that awesome? We knew about that blue line since 10:40 a.m. yesterday. Knew about that blue line since 10:40 a.m. yesterday. Knew about those 1-to-1s for over 10 minutes. Jen, remind me, where did you take profits? Oh, right at the area that could stop the market. I want you guys to see the power of this software. You don't need it. You had 1-to-1s. I don't know. It could be a tick data thing. I don't know why. I was running a couple different things. You were out at 35 on this trade One tick above the 1-to-1s. The low of this move was 33. You were out 2 ticks above the low point. I think John said don't do it on the Ninja update. He was having problems with it. It may have been because of copiers and stuff. But you were out 2 ticks above the lowest point of that move down. And guys, this is one of the advantages of Nexgen. The market dropped 68 ticks, almost 7 points. And Jen knew exactly where that bounce was most likely to happen and took an exit a tick above it. I'm sorry, that is 32 flavors of kick-ass. And if that doesn't excite you that now you're a part of this, that you own this software, or you at least have the ability to own this software, why would you ever get caught trading into these lines? Look at that. I mean, son of a... Let's do this. Why is rule number 2 a rule? Because rule number 2 keeps you safe. And you want to see something else that's kind of cool? Somebody showed me this winner. Jen showed me this winner. Some of you took this, maybe it was this one, from before it hit, because there was a fluctuation before it actually hit. I think some of you took it over here. That Cam. Guys, if you don't know Cam, he is the backbone. He is the big toe of this foot that is Nexgen. He is our Sergeant Holka. Great job. Feeling pretty good about that exit, right, Jen? I always tell people, I'm not in sales, I'm in education. I'm not in sales. I don't sell software. If you spend a day in this classroom and see what people are doing with this software, nobody should need to sell you on it. It's freaking amazing. And there's so many opportunities. You just got to learn how to use it. It's the world's greatest hammer. You just got to learn how to build with it. Something about those fibs, right? Jen, were you like me? Did you not trust him always? Did anyone else? Guys, that was my thing. If I didn't find an opportunity from here to here, I took this short and lost almost every time. I couldn't wait to trade into a line because I believe the market owed me a win. Rule number 2 is the most broken rule among new users because that's the rule that forces you to be patient. I'm not a patient person. Morgan, there's your 2004 termination, small triggers roll, bing, bang, boom. Now you just have to trust the limit orders, but you don't, Jen. You don't have to trust them at all. You can keep doing what you're doing. Because what you're doing is working, right? There was a time when I taught entries, Jen, and I'll show you exactly how I taught them. Let me find a good looking entry. Alright, so don't look at the large chart because you guys are going to go into, but it's into a termination. I'm going to show you exactly how I did it. And I'm gonna make this one bigger. I'm going to take a picture of it. Brand new users, I tell you every day, learn to trust getting in at the area inside of favorable large triggers. Just learn to do it. You know exactly where your stop is going. It typically gives you the least amount of risk. it typically gives you the most room to the profit potential, right? And I tell new users, do that. Let's be honest. It's terrifying to buy a market that's on its way down. Is it just me? It's terrifying to buy a market on the way down. It's also terrifying to wait for your limit order, or to not get caught up in the idea that it's a 5-1 chart and there's going to be a lot of little fluctuations all over the place. So the best entry is always the area inside of favorable or triggers when the rules are met. But I used to teach this, Jen. If you can't do this in the beginning, if you're not comfortable with it, if it doesn't make sense yet, if you don't trust it, the reversal bar, that confirmation, is your second entry. Or your first entry if you're not ready for this one. Because what it does is it establishes the risk and it pushes the market in the direction. And either one of these are great entries. They really are. They're almost the same damn thing. It's when people jump in over here, right? Or when people jump in up here, that's when it's problematic. But I think what you've done is you're creating a confidence through that confirmation, and that confidence is keeping you into these trades to where the expectation is that they will go, to where the likelihood is that they'll go. So it's worth its weight in gold right now, Jen. Don't take it as a negative. You could if you wanted to, Wayne. You could, right? It's already gone down through. I like what... So let me show you what Wayne said. And Wayne, there's another idea too on this one. But check this out. And I like this because this is the right picture for it. Are you ready? Wayne says, why not just put a buy stop above the mid-band so you catch it on the way up. Right, Wayne? You entered the market right here then too. And you watched it go up a point, and then it came right back down to support inside of triggers. So there's always a little something something there. That idea would have had you in here. So there's got to be more to it. Maybe it hits the area and you do it, or it goes. So I like it though. There was a gentleman, he's been trading with us forever. He would use the half bar concept. When he gets to the area, yeah, so that would have put you in right here. And then you would have had to sit through this, which is fine. You know where your stop goes. And if you didn't catch that order, well, then it would have had you in right here. Same thing. Okay, so cool. How far past the mid-band does it have to go for you to do it? You realize I'm working with an incomplete thought. One what? 1 minute? 1 hour? 1 tick? Okay. Well, then I'm going to say, is that 1 tick below the mid-band? So it would have gotten you on the way up based on what you just told me. But it's very possible that I'm misunderstanding something. This is why we talk in pictures and don't make me guess your plans, guys. Because I suck at it. I really do. Yeah, post a pic. I'd love to see it because I know that your entries are good and I like the way you do them. But I don't understand them clearly. We all learn each other's language over time. I would love to see that entry though. Because, what I was saying is the idea of the half bar too. There's people that'll say, okay, when I reach my area, I'll put an entry at the top of this bar on the way up. I love this. This is how I learn. You guys have so much great stuff. Okay. So why didn't it get you on the way up the first time? Like if you had to teach using this picture, you would say, okay, price goes through and I completely ignore it, and then it gives me a reversal bar, and then the market has to come back below the areas, and then I'll activate my stop. Is that right? So you have to get a reversal bar and then a retracement and then a push? No, I understand placement. I understand a tick above the mid-band 100%. Does that make sense? I think he's just showing placement on this one. Okay, but so Wayne, what you're getting right now is the challenge that I get every day in this classroom. A tick above the mid-band, right? But when do you activate it? When do you activate that order? When do you put that order into play? Where does the market have to go for you to want to put that stop order in? That's the part that I don't understand. So okay, I think you're missing my question here. So check it out. If you were going to do that, let me find a cool entry, because I think there's a huge amount of value in what you're doing here and in what you're saying. I really do. But I don't completely understand it. So just hypothetically, and I want you to use your imagination a little bit. I need you to suspend disbelief for just a moment. If this were the window of opportunity, ignore the fact that the synthetics are way down there. If this is where my entry needed to come from, market pulls back to it, and you're going to use your theory, right? You're going to use your entry. And Wayne, I'm serious. I think that there's a lot of value in what you do. I've seen your entries. When do I activate it? So I'm a tick below it, but I'm above the mid-band. Not yet, right? How deep does it have to go before I'm willing to activate that order? It just has to go by the 1-to-1s or the mid-band? Okay. So I love this. I do. I love this. So right there, I'm activating a buy order a tick above when price is at 58. And you're like, cool, they can go down as far as they want, but if they come back up, I'm taking the trade. I love it. I love it. So there you go, guys. There's another way. That makes total sense. We just had to go through it by bar by bar. Buy now works, Hung. But all of this is stemmed from, ladies and gentlemen, Hung, you don't have to hit buy now. The precision of the order is so good that you can literally wait for the market to come to you when the rules are met, when everything's the way it needs to be. It does there, absolutely. Look at that. But you could also buy the mid-band and you know where your stop goes. And you can buy the mid-band and you know where your stop goes. And you can buy the mid-band and you know where the stop goes. And you could buy the mid-band and probably get stopped out. So I totally see the value in it. And it keeps you from getting run over if the market doesn't go up. I get it. So how do you react to this one that went through it, back up, back down? Do you take it twice? Cool. I like it. So I'm saying, guys, you'll find your way with the software. You'll find your way with the software. I love win 5, lose 1. I typically enter on reversal bars with what I do on the NASDAQ. It's not the same as the high probability trend trade. So this goes back to, and I like this little segue here, what kind of trade are you taking? Maybe the entry that makes sense for your trade is a limit order in an area inside of favorable large triggers. Maybe the entry that makes sense is a buy or sell stop limit halfway down or just beyond. So like Wayne's went above, he might do a sell stop. Whoops. And I was late on this one. He might say, okay, if I get below the halfway point, I'll ride that mofo down, right? My risk is established. There's a million ways to do it. And obviously I was too slow, Wayne. Yours would have been more right here, but the market was already there. I love it. I think it's beautiful. Maybe the right entry for your trade is buy now, is sell now. So you have to know, I would never go short here, personally. I'm in an uptrend with momentum from a strong bottom. But guys, every trade is different, right? Every scenario is different. Everything is different. The high probability trend trade gives you the ability to be 100% consistent with everything you do, to have a rock solid plan. So you know precisely what it takes to get you into the market. You know how to enter it. You know where your stops go. You know where your targets are. And then once you venture outside of that, there's different rules for this. There's different rules for this. There's different rules for this. But guys, the bottom line is, when I hand you the high probability trend trade checklist, right? When I hand you chart reading 101, when I hand you a KISS plan, this is for the absolute best of the best, 100%. Holy shit, I can't believe the market's giving me this entry. It's your foundation. And what Wayne is showing you right now, that once you build a foundation, you'll find a way to do it your way. Once you understand how to read the indicators, you'll do what works best for you. Hung said he loves momentum and buy now. Hell yeah, that's going to be your plan. But if you can't identify momentum, you can't execute your plan. If you don't know if your path is clear, you can't execute your plan. So guys, when we talk about what I teach every day, this classroom is kindergarten. This classroom is hoping you don't nap and eat paste before it's over. That's it. All we're doing is laying a foundation. And then from that foundation, you will find your best course of action. You will find your best entry. Wayne found his best entry. Has nothing to do with what I teach. It doesn't mean for a second that Wayne is wrong. Jen's found the entry that makes her the most comfortable. Doesn't mean she's wrong. I enter one way. Doesn't mean I'm wrong. It just means it's right for me. Right? It's not a strong trend yet, Joel. I love the look. But it takes 30 bars. It takes 30 bars to establish a strong trend. We're just not there yet. But what you did have is a market that's moving up quickly. There's nothing in the way. And you get in right at a midband, right at the bottom of those triggers. And you're out of trouble. And when a third divergence prints, you're out. You couldn't have done this any better, Joel. You didn't have the advantage of momentum on the large chart. Everything else was perfect. So you managed a little assertively. Joel, this is gorgeous trading. Absolutely gorgeous trading. Understanding that there's a challenge, managing assertively because of it. Guys, that is my hope and wish for every one of you. Beautiful trade. Steve Diego, exact same trade, different look. Everything says up. It's not odds favorable momentum at all. It's weak triggers. But everything says up. It's odds favorable on a small chart. And you ride the momentum. Hong, there it is. Everything's up. There's nothing in the way. Momentum. Buy now. Get the hell out at $200. Great trade. But guys, that's not odds favorable momentum. That's weak triggers, as taught every morning in this classroom. Small inside of the large. No. It's either strong or weak, Steve. Those are weak. Period. These are weak. Small's inside. And I know that that pisses you guys off when I do that. But it won, Mark. Don't care. You have two looks, my friend. You have strong triggers or you have weak triggers. And there's a transition on the way to weak triggers. You're not even there. I could literally take this picture and teach a class on what it looks like to have weak triggers. But Mark, it went up. Of course it did. Everything's up. But Steve, you had odds favorable momentum on this chart. Your small chart is where your momentum came from. And you took a momentum trade based on it. Does that make sense? It's okay. Jen had the same picture yesterday where she didn't have the strongest triggers and she pointed it out. And I said, well, let's go look at the whole picture. And Steve, that's all you did. And I don't think you realized that you did it. I don't know that you even realize you did it. You're such a good chart reader. You said, I'm coming from the areas, I'm trading towards the areas, everything is up, and this is strong as all get out. That's enough for me. I love the trade, Steve. But because we are an educational room, guys, I am obligated, I am forced to say those triggers aren't strong. Strategy makes you a better trader using fib as a high and low to execute trades. Well, Hong, can I address that? Understanding that fibs are potential highs and lows, and then letting your trigger lines tell you whether or not they have the potential to break, whether or not they have the potential to hold, or whether or not they're actually broken and it's time to look for the next trade. So when you talk about highs and lows, Fibonacci shows you where they have the potential to be. But you still have to do a little bit of work. But what's nice is that if you're in a long position, you've got a very clear, concrete visual representation of where that market may stop. And what a great place to take profits, right? Jen showed that one earlier. Jen got out at the low freaking tick of the move. So this had the potential to be a low, but it wasn't a low until it reversed and went the other direction. So I like to talk about the difference between actual and potential. This fib could have been a top, but the top came from a little higher. But you knew not to trade into it because look at the untradeable bounce. Love it. And Hong, it was day one, day two maybe, and you're already recognizing the advantage that this stuff gives you. You're already recognizing the importance of the fibs. I love it. Love it. That's all I want from you guys. Just read your charts. You'll find your way. You'll find your way. Once the basics are there, you'll find a way. Everybody does. If they learn the basics. So we've got about 20 minutes or so. What would you guys like to talk about? What's rattling around in your brains? What are you curious about? And one of the things, guys, too, I'm going to tell you, when I go through and I look at your charts and I point out maybe an annotation that isn't accurate, this is why you post in the room. You post in the room to get that feedback, to make sure that your chart reads are on point, to make sure that you're trading with those advantages. I just don't believe it's about the money. I think the money is a byproduct of the process, guys. I think the money is what happens when you learn the process, when you follow the process. The late Mark Douglas, when you stop expecting to win every trade, you'll start winning most of your trades. If you don't care about the result, you care about the execution of the method. Because it's the method that has been proven to win more than it loses. It's not your desire to win. It's not your need to pay mortgage, guys. It's just trading that pattern. And one thing that Nexgen's freaking amazing at, and we have been for a really long time, is teaching people how to recognize patterns in the market, how to capitalize on them. K-Dog, show me a picture of an unclustered large trigger. Please and thank you. Are you talking about that split trigger look? I don't know. There's not enough information there. Do you have odds favorable momentum? Do you have a clear path? Guys, this is why we have to talk in pictures. K-Dog, show me the picture of your chart. Show me what you're talking about. Because if I have, and let me go through and let me show you guys exactly what I mean. If I have unclustered triggers, but it's directly into a termination condition, then I'm going to avoid it. If I have unclustered triggers, but it's right into a term, if I don't have momentum, there's more to it than just saying split triggers, right? That's the entry. You're already skipping 2 rules. If you'll show me that picture, I'll give you everything I have in my brain to talk about it. On what has the potential to happen, Hong? Absolutely. Rebuilding after a crash. So we're up here. Momentum 6120. So you got in down here, waited for everything to roll, and then took it up. All right. Nice chart reading. Oh, you entered up here. So you said your first entry point is here, so maybe you added on, I don't know. But you're in, momentum, path, good stuff. But you're absolutely right, Hong. Chart reading is 90% of what you do every day. 10% is trading. Gary, nice trade, by the way. 10% is trading. And K-Dog, I'm not pushing you aside. I just need a picture, brother. Gary, if you're going to trade the ES until you pass a combine, well, then you would have to say, Hong, show me a picture. Show me what you mean when you say that. Where are you looking at it? What market? Give me the opportunity to give some feedback, guys. I don't know what you're talking about. Jen, everything says up. It clears trouble. You get in, you get out. Absolutely beautiful. Second one doesn't hit your target, so you don't give anything back. Gorgeous. I appreciate that, Steve. So, Hong, what market? At least tell me what market. Oil? I'm in an uptrend. I have momentum. I don't have a clear path. I don't think we're consolidated. Not yet. To consider it consolidated, Hong, I would want to see something like... And let me show you how rule number 2 pays dividends. I would call this consolidation. From termination to termination to termination, termination, termination. To me, that's consolidation. What you're looking at right now on crude oil is, you know 100% where decisions are most likely to be made by the people in charge, which is this Fibonacci area. And what you're seeing on your small chart is that fight between buyers and sellers right at the decision-making process. Yeah, but this is a tiny little chart. So what does consolidation say to you? Hong, consolidation to most people says stay the hell out of the market. All that movement happens inside of 1 bar, right? Large chart's not consolidated. Large chart's coming from a termination with the potential to break an area and momentum on its side. Small chart is showing you where the fight is happening, right? Consolidation to me means that my large chart can't get out of a range. Couldn't care less about the small chart. The small chart will be out of this range in a minute or 2 probably. So this is where I say, I need momentum up. I need to see things all agree, and then I'll look for an opportunity. You're absolutely right. There's no rules meant for a trade right now. But I love to define consolidation on a large chart. And I'm pretty I like that. From termination to termination to termination, termination, termination. Here's my consolidation. Rule number 2 not met 3, 4, 5 times. There's my breakout. There's my opportunity to capitalize on the breakout. Does that make sense? Always letting the large chart lead the way with what we do. And here the large chart says up, up with momentum. We just have to clear a hurdle. One of the great things about the 2-chart process. We let the big chart tell us what we should be doing, and we don't get caught up on the small chart until it's time to look for an entry. Great observations. I appreciate all your talking. That's hard to do in the beginning. I like it. Once it went through, Wayne, you said, here's my buy order. They slipped you a little bit. They must have gone up quick. And then when you get to those triggers that are down, you're like, man, something's not working on this 50-50 look. And they got you a little bit. I like that, though. I like the way you do it, Wayne. I really do. I think it's a well thought out, intelligent approach to entry. Let me see if I can find. I think I did it earlier today, to be honest with you. There it is right there. Check it out. Here, let me save this so that I can blow it up. And there might not, Hong. And there might not. I aggravate the hell out of you people when I say that. Hong, who cares? Right? Let's just wait for our rules to be met. Oh, go walk the dogs. Always great having you. And I know that seems harsh, and I apologize. Wayne, there it is right there, man. I did the same thing. I typically enter on a reversal bar, but everything lined up perfect. And I got in, I put a buy limit at the halfway point of the bar going into the area that I expected to hold. So when it came up, I got in just a little bit better. Exact same concept, I think, as you. I did that this morning. So Hong, one of the things that I've found working with people is, and I agree with you, there might be a break on crude oil. That momentum says we have the potential to break, right? And now everything's starting to agree. What I found, though, is when I form opinions, and I'm going to put all of this on me 100%. I form the opinion, it's just a good loser, Wayne. So things that I see. You have momentum, right? You even have, you're above all the fibs. You do have that divergence high right there. Your entry makes sense. But you already had 2 divergences. You hid them here. So you already had 2 divergences, Wayne. And then you had a third one in the same price range that was lower. I think that's what you missed. I think that your entry makes sense. Your trade makes sense. I think it follows rules. I think that what you missed was 3 divergences in the same price range. It doesn't matter if it prints after entry. Doesn't matter when it prints. 3 divergences in the same price range may terminate the trend. And it's even more powerful if it's lower than the previous. And Wayne, this looks damn near exactly like what you did, doesn't it? You had 2 coming in, it pushed lower, you find an entry. When the third one prints, you just got a GTFO. And that would have printed after the entry. So the after the entry is something that you made up. And that's okay. But the way it's taught is 3 in the same price range is enough for me to accept it as an exit condition. It would have been a smaller loss. But that's it. Everything right up until that third divergence, Wayne, rock star. And this is where I go back to language again. 3 divergences in the same price range, yeah, is when your advantage goes away, which makes it an exit condition. And the cool thing is you can always re-enter. But everything about this trade, solid. You just missed the red flag. Great stuff. This is why we post in the room. And there you go, Hong, check it out. Now you have the momentum, the potential to break from a termination. And let's see what happens when it pulls back to that area inside of triggers. If it pulls back to that area inside of triggers. You could sit through all of that nonsense and just wait for the best of the best. All right, K-Dog. Unclustered. Awesome. So let's look at the whole picture though, right? First thing I notice. Odds favorable, potential to break. From a weak bottom. Divergence prints. And you're absolutely right. There is a larger window. Hong, do you have a magic 8 ball in front of you? You speak very definitively on what the market will do. Remember, all we're doing is trading patterns. I never know what the market's going to do. That's why I trade patterns. And I do that in the room. I focus on language in the room a little bit. I don't know if it's going to go up or down, Hong. I never do. But what I do know is that I have a set of rules. And if I follow the rules, and forgive me, K-Dog, I digressed a little bit. If I follow the rules, this pattern has been proven to win more than it loses. So I don't even know if this is going to win. I just know that it has a stronger likelihood to win, which means that I have to be very willing and ready to accept losers. There's a good example too. K-Dog, can we use this one? Because it kind of shows the whole thing. So, and let's go through what we're looking at. And I think you'll dig this lesson. And I think I even have some material for you that I can drop in the room. We're just going to say hypothetically the large chart is perfect, K-Dog. 100%, right? The large chart is the most gorgeous look that you have ever seen in your life. And now you just have to define your entry. And let's get that off of there. So at the time of the reversal bar, all the basics that we talk about every day, you know that price is likely to retrace somewhere inside of these trigger lines, right? But they're not one on top of the other. And what that says to me is, hey, Mark, there's some indecision. And the yellow bar shows me where the retracement could happen. And I know that my stop has to go down here. And K-Dog, none of us want that much, do we? Of course not. So check this out, though. That's where the retracement could happen. That's where the stop has to go, if you're being as conservative as you can be. But this is where the bounce is most likely to happen, at the areas inside of triggers, right? It's in that retracement range, but this is where I'm anticipating the bounce. So even if I get in at the triggers, I still have a lot of risk. Maybe I'm not comfortable with that level of risk. K-Dog, if the large chart is perfect, I love this. I love confirmation. I love the market to absolutely, positively prove that it's going in the direction of my trend, that it's going in the direction of my momentum. And this doesn't guarantee a winner, but at least what it does, K-Dog, is it gives me something to put my stop behind. It gives me a pivot to put my stop behind, and that helps me mitigate a little bit of risk. So when the triggers are split, let me find this because I know that I have this. And I'm going to drop this in the room for you. This is always the easiest look, guys. This is always the easiest look. The idea that when the large and the synthetic are one on top of the other, you have the absolute most accuracy. We all know that. I teach it every day. But the reality is your entries aren't always perfect, and very often you will get those split triggers. And you have to remember that price may retrace here and it may retrace here, and you don't know which one it's going to be. And price may bounce here or price may bounce here, and you never know which one it's going to be. So the idea that when there's a lot of space in between, the reversal bar gives you the ability to establish a risk. And again, it doesn't guarantee a winner, but it guarantees a smaller loser if it goes to that second retracement zone. Does that make sense, K-Dog? So as long as the large chart rules are met, that's kind of what I'll do. I'll force it. But of course, in this trade, you've got a 50-50 trade with divergence. The divergence is coming off of 1-to-1s. You've got fibs on your small chart that aren't showing up as synthetics on your large chart. There's so much wrong with this right here. That's when I would throw away the entry. That's when I would just say, man, I don't have a statistical advantage. The rules are great, aren't they, Hung? And the cool thing is you're gonna come up with your own rules eventually. I love that. I love to hear that. I love to hear that. And my promise to you is that it's going to get easier every day. It will get easier every day. It will get to a point to where reading your charts almost becomes second nature with a little bit of practice. And you really will. You'll start talking to yourselves. All of you will do this, and it's going to be funny because it's going to catch you by surprise when you do. You will say, oh, I do have momentum. Holy crap, I do have a clear path. My plan says that I'm obligated, without hesitation or question, to put a limit order 2 ticks above that mid-band. And I have to take this entry because my rules are met, because the large chart says that I have momentum, that I have a clear path, and if they can pull back to the area inside of triggers, this is my entry for the highest probability trend trade. And if I get my entry, I know that my stop goes 5 ticks below those triggers, and before I ever get into that trade, I know exactly where my entry will be. I know exactly where my stop will be. And oh my gosh, for the love of fuzzy, I know exactly where I'm hoping this trade goes before you ever enter. Pretty awesome, right? And now I've done everything that I can do. The only thing that I can't do is make them come get me. It reduces risk dramatically, Hung. And when you wait for the pullbacks, it gives you even more room to get to your targets. That's the whole premise of the high probability trend trade. This is not the only trade that we teach. This is not the only trade available to you, but this is the one. Synthetic fibs on the small chart aren't lined up with the large. So K-Dog, yeah, let me show you something. Here's my 5-1 fib. See how it extends all the way to the right? I see it on my large chart right here. This is my 13-2 fib. I see it on my small chart here. And even on the large chart, this fib is a 21 fib, and it shows up. And when I look at your picture, whoops, let me go back and click on it. That's it. And when I look at your picture, K-Dog, see that fib right there? It's 62. I don't see it over here. The fib at 54, I don't see it over here. And it looks like you're printing synthetics, but something's not jiving between the two. So you're missing out on some large chart information. Does that make sense? And one of the things you can do, you can rebuild if you want, or you could also if you felt like you wanted to, put a ticket in with Jason and go, hey, my synthetics aren't printing on the large chart. Can you help? And he'll have you fixed in a matter of moments. But yeah, that's one of the things is you should be able to see these fibs over here. Oh, that may have something to do with it, but that'll have something to do with the fib creation, but it shouldn't have anything to do with putting your synthetics. Man, they didn't get us, guys. Those sons of guns. And they ended up hitting that fib. So now I've got a termination condition and I just have to sit tight. Not every move is your move, guys. Not every entry is your entry. So, great stuff. Great stuff today, guys. That's it. We ran over. I love it when you guys make